And ladies and gentlemen, please welcome to this launch of Karandaaz Financial Inclusion Survey. My name is Hassan Saeed, and I'll be your host for today. I welcome you all to this webinar to mark the launch of the Karandaaz Financial Inclusion Survey. As of 2022, Karandaaz has taken ownership of this survey and aims to conduct this survey every 2 years. Our hope is that this survey will be used to mark the progress on the Pakistan's national financial inclusion strategy. We need to share their thoughts on today's webinar on social media using the following hashtags: hashtag K-FIS, hashtag KRN webinar, hashtag Park Financial Inclusion, and as well as hashtag Financial Inclusion. We'll begin with welcome remarks by Mr. Waqasul Hassan, CEO Karandaaz, and opening remarks by Dr. Shamshad Akhtar, Chairperson Karandaaz, followed by a keynote address by Mr. Noor Ahmed, Director Agri Credit and Financial Inclusion Department, State Bank of Pakistan. During the course of this webinar, we'll be sharing findings from K-FIS 22 edition. We'll also have two panel discussions focusing on the financial inclusion of the underserved population segments and interoperability. Lastly, we will conclude the webinar with closing remarks by Dr. Nafisa Shah, member of the National Assembly of Pakistan. To begin the day's proceedings, I would now like to invite Mr. Waqasul Hassan, CEO Karandaaz, with the welcoming remarks. Mr. Hassan has rich experience in designing and implementing a wide range of development finance programs. He has a special interest in climate-related investment, in regulatory reforms, seeding innovations, entrepreneurship, and establishing key institutions that impact the financial landscape of the country. Now I'd like to hand over the mic to Mr. Waqas and ask him to give his remarks. Mr. Waqas, I think you're on mute. आपकी आवाज नहीं आ रही.
Ji, thank you, Hassan. Can you hear me?
Ji, we can definitely hear you now.
Ji, thank you very much, Hassan, for the introduction and lots of hashtags. Dr. Shamshad Akhtar, Chairperson, Karandaaz Board, Mr. Mahesh Mishra, Economic Counselor, UK's Foreign Commonwealth and Development Office, and Mr. Noor Ahmed, Director Agri Credit and Microfinance, State Bank of Pakistan. Good afternoon and Assalamu Alaikum. I welcome you all participants and audience to the launch of Karandaaz Financial Inclusion Survey. It makes me very proud that Karandaaz has taken ownership of this nationally and provincially representative demand survey. Although we have been working in the financial inclusion space for over 8 years now, this is the first time we have undertaken an initiative of such a magnitude. The 2022 K-FIS, as we are calling it now, was commissioned with support from the Bill and Melinda Gates Foundation and responds to the need identified by multiple stakeholders for timely demand-side data and practical insights into the state of financial inclusion at the national as well as the provincial level. This survey tracks access to and demand for financial services, measures adoption and use of financial services, including digital financial services among key underserved groups, female, poor, rural, etc., identifies drivers and barriers to adoption of financial services, and then most importantly, produces actionable forward-looking insights based on rigorous data to support product and service development and delivery. Data collection for the 7th edition of this survey was a massive exercise. The sample consisted of 6,672 adults, 15 plus, and it was done in August-September last year. And unlike previous editions, the 2022 survey also covered AJK, GB, ICT, and the newly merged districts of Khyber Pakhtunkhwa. Please note that we have tried to make it truly representative. As you all know, the government of Pakistan released the National Financial Inclusion Strategy in 2015. The World Bank worked with 20 countries to support the design and implementation of the NFIS and its related action plans. Amongst the 6 building blocks in the execution of these plans, collecting data and generating diagnostics was the foremost. The importance of collecting both data, demand and supply side data to inform policy making and identifying gaps was clearly highlighted. In fact, the World Bank backed these country action plans by commissioning its own periodic demand side survey, the FINDEX. The FINDEX generates national level statistics on access, awareness, and utilization. The K-FIS, however, offers significantly greater depth and breadth in terms of number of individuals and number of indicators it would cover, allowing for data to be passed and studied by key segments such as urban, rural, provincial, gender, and age and income groups with statistical representation. This, our hope is that K-FIS will provide a valuable additional source of data that can complement the supply side statistics so ably collected by the central bank to provide a more comprehensive and granular view of the financial inclusion in Pakistan. In fact, the state may consider it as a valuable input on the results tracker of Pakistan's NFIS to maintain a 360-degree view of the financial inclusion of Pakistan's citizenry. I would also avail of this opportunity to talk about digitization, which is one of the core pillars of Karandaaz. Karandaaz has always been at the forefront of the digitization of the financial sector ecosystem in the country. We are supporting setup of key technology infrastructure like RAS, digitalization of the secure transaction registry in 2021, and digitalization of the SCCP through LEAP project. These are all high-profile initiatives. In addition to hard infrastructure and system support, we have worked on the soft and policy side too, and contributed to regulatory framework for digital banks introduced by the central bank, and these days working with the SCCP on the digital assets regulatory framework. These efforts are creating impact and moving the needle. I would like to congratulate the SPP on announcing NOCs for Pakistan's first cohort of digital banks. The next increments within the financial inclusion will in great likelihood come from beyond traditional banking systems, as demonstrated by the K-FIS 2022 data. Therefore, the convergence between demand side considerations of price, access, and preference, and supply side factors of cost, service provision, and effective delivery can only take place through sophisticated offerings that are based on strong data-based decisions. We at Karandaaz believe that data-driven decisions and evidence-based policy making will be a key to the extent we can tap into this very rich potential. By committing to conducting the K-FIS survey at regular intervals, not only is Karandaaz collecting important data on a rich set of indicators, but is also promoting a data-centric culture. As part of our knowledge creation vision, we plan to establish K-FIS as one of the credible go-to reference points and measure to partner for demand-side financial inclusion data. I'm glad to share with you that some of this has already started happening. This year, Innovations in Poverty Action, IPA, has leveraged the survey to study interoperability in Pakistan, which is part of a multi-country study IPA is undertaking. Dr. Russell, who's leading this study, will elaborate more in the second panel session of the day. I will close by thanking our distinguished keynote speakers and would like to especially mention and recognize the efforts of Associates in Development AID, who collected the data for the survey, in Semiotics Consulting, led by Imran Khan, who have analyzed the data and presented the findings. Special thanks also to my own team, Meher, Director, RMC, Ali Akbar, and Hassan Saeed. Thank you and hope you find results useful and enjoy the panel sessions. Thank you.
Thank you so much, Mr. Vakas, for those valuable insights. Now, I would like to invite Mr. Mahesh Mishra. He is Counselor and Group Head Economy and Trade at the UK's Foreign, Commonwealth and Development Office, Pakistan. Mahesh is an economist by training with nearly 20 years of experience in the UK civil service. In addition to advising governments and private sector in Kenya, Somalia, Iraq, Nigeria, Bangladesh, and India, Mahesh was also the UK's representative on the G20 Financial Inclusion Expert Group. Mr. Mahesh, I would request you to please address the session.
Thank you very much, Hassan, for those kind words of introduction. Dr. Samshad Akhtar, my friend and colleague, Vakas, Noor Ahmed Saab, and other distinguished member of this gathering. First of all, I would like to express my appreciation for this opportunity to speak to this gathering. Thank you very much for organizing an event to launch the second or third edition of the Karandaaz Financial Inclusion Survey. My heartiest congratulations to Karandaaz for successful completion of this survey. At the outset, I would like to appreciate efforts of Government of Pakistan, the State Bank of Pakistan, the private sector of Pakistan, and think tank and non-profit organizations such as Karandaaz in progressing the financial inclusion agenda in this country. The UK government has been a big supporter of financial inclusion across the world and including in Pakistan. We have met significant amount of financial as well as technical and intellectual resources in shaping this agenda in this country and also progressing this agenda. And it's really satisfying to see how much progress Pakistan has been able to make in this area over the last 20 years or so. And access to financial services, we believe, are a powerful tool for helping poor people work their way out of poverty. That is exactly why we are interested in financial inclusion as a part of our development strategy and thinking. And this doesn't include just access to financial services by individual. It also includes access to financial services, especially by micro, small, and medium enterprises. And Karandaaz as an entity has been playing a significant role in bridging the gap of financial access by MSMEs in this country. As the Karandaaz Financial Inclusion Survey data is going to indicate, and as Waqas set out some of the key findings of this survey, the task is certainly far from over. There's a lot more that needs to be done, and the challenges of financial inclusion across the world, not just in Pakistan, is going to get more complicated, more complex, in part because the rising cost of living is compounding access to financial services as well as need for financial services. And add to that the climate vulnerability, the climate related shocks, which are actually a stark reminder of how significant some of the financial services can be, like insurance, whether it's for individuals, whether it's for companies, whether it's for government. Insurance-based financing mechanism can play a significant role in helping individuals, companies, government to tide over the financial needs of meeting climate-related shocks and their challenges. While the challenges are increasing, there are also opportunities, especially digitization and development in information technology is making it far more easier now to deliver financial services to people literally on their palm, on their phone set. This wasn't really foreseeable, say, 2-3 decades before. And it has made possible to deliver financial services to people at a relative fraction of the cost. The transaction cost of giving financial access has gone down compared to, say, the brick and mortar model of delivering financial services through bank branches or insurance outlet. So digitization and technology is making it possible to expand financial services at a rapid scale. If we want to expand access to financial services at scale, that's going to require significant amount of collaboration and partnership across government, across policymakers, regulators, the financial sector, private sector. Without partnership and collaboration, this is not really going to be possible. And this gathering is a very good example of collaborative efforts in expanding the financial inclusion agenda. I would like to finally end by congratulating once again Karandaaz for this excellent initiative. I hope that this initiative is sustained and there are many more edition of this survey to come. And I would hope that the data and analysis that is being generated through this survey is going to help policymakers, regulators, and financial sector to come up with suitable and affordable products for those who need financial access. Thank you very much.
Thank you, Mr. Mahesh, for your remarks. Now I would like to welcome Dr. Shamshad Akhtar, Chairperson Karandaaz, for her welcoming remarks. Dr. Shamshad, in addition to a broad-based international development career, has served as Finance Minister of Pakistan as well as the Governor of the State Bank of Pakistan. She is a member of the advisory board of the Sustainable Finance Center in the UK. And Dr. Akhtar remains engaged in both global and national policy dialogues and is the global advisor for the Belt and Road Initiative. Now I would like to ask Dr. Shamshad to present her remarks.
So thank you to everybody out there. Mahesh, it's great to be with you on the platform. You represent very powerful sponsor of ours. I'd like, in absence, to also thank Bill, Melinda, and Gates Foundation that has played an instrumental role in the digital financial inclusion services. Waqas, somebody who I respect tremendously for his commitment and drive to take us forward, and his partnership with public and private sector. Most of all, State Bank and Noor and I have been in the trenches in the State Bank, laying the foundations of financial inclusion at a time when there were only 500,000 people in the financial inclusion net at that time. So we have come a long way. I understand, of course, that Pakistan's National Financial Inclusion Strategy, the latest one, has an ambition to increase financial inclusion to 50% of all adults. Enhancing usage of digital payments, about 65 million active digital transaction accounts with gender segregation of 20 million accounts by women. Of course, one of the other milestones for this financial inclusion strategy is not only just the usage of the digital payments and the active digital transaction accounts, but also push for enhancing the deposit base to 55% and promoting SME finance to 700,000 SMEs, 17% of the private sector, a dream that we have all been trying to pursue and to track, and hoping that some of the gaps in infrastructure will help us take it forward. We, of course, would also like to see in this inclusion strategy that we serve 6 million farmers further through digitalized solutions. So opening up basic adult accounts has been a very difficult first step in a number of countries, particularly in Pakistan, but nobody is giving up this drive because it is an enabler of poverty reduction and it promises prosperity. We have to recognize that both the poverty reduction targets are off track. In fact, it has grown substantially. So we have a long way to go, given that there has been some reversal in the progress. Progress in financial inclusion in Pakistan, as captured by our survey findings, is mixed. And at the outset, let me compliment the entire team that has been able to undertake and participate in the survey, as well as design the survey and to bring it to this level. And leadership of Meher has to be recognized because she's our knowledge driver. So few developments and trends have and will offer a new impetus to financial inclusion. Notably, from the survey, we see that financial inclusion in Pakistan has increased by 9 percentage points, reaching 30% of adults in 2020. Prior to the K-FIS survey in 2020, a similar increase in financial inclusion was achieved over 7 years. So we have been tracking this for some years, and I think we are pleased that some things have happened, but a lot has yet to happen. So as the survey points out, we must be doing some things right. But the findings also show significant and chronic gaps in the inclusion of women, rural population, and across different regions in the country. The survey captures areas where financial inclusion in Punjab, Islamabad, Azad Jammu Kashmir, and Gilgit-Baltistan exceeds the national average. In Balochistan, it does not even reach 15%, with the financial inclusion of women being as low as 5%. Inequality in the provision of financial services means that pockets of Pakistan's citizenry remain unserviced. This, of course, is no longer acceptable when it comes to times when we are pushing for gender diversity that will bring in more productivity and prosperity in Pakistan, besides lifting our social game. So given the size of the unfinished agenda, the K-FIS, in my view, is a step in the right direction, but progress needs to be accelerated. There's hope because Pakistan needs to do a lot to adopt and implement the 2030 Sustainable Development and Sustainable Finance Agenda. Both, if properly deployed and harnessed, it has the potential to generate enormous growth, gender diversity, and value from financial inclusion. A second thing that lends us hope is really what happened post-COVID. While it was very traumatic for all of us, but 2020 COVID-19 episodes have necessitated new ways of tracking the movement of people and shifting to contact tracing apps to notify proximity to people infected with COVID-19. It has led bodies, institutions to institute digital cash transfer mechanism to provide not only just the transfer of resources, but facilitate social safety nets transactions against, of course, the database economic registry of the country. And it is amazing that Pakistan added 7.5 million new account holders. At the same time, a third driver, which I found fascinating, is the Asan mobile account, simply because we are very pleased with this initiative at the stock exchange. This Asan mobile account through third-party service providers has helped onboard more than 5.5 million wallets. About 44% of them were women. And then there are other technology things like the GPS, microphones, accelerometers in the smart devices that has offered us opportunity to influence behavior and has tremendous commercial value for those providers who are associated with it. Of course, we should not underestimate the power of the economics of externality It works fantastically as innovation spreads and penetrates across the board. Hence, State Bank's role in setting up new mechanisms and more recently EMIs, the digital institutions that Vikas referred to. So I'd like to join him in congratulating State Bank for a range of good initiatives. And I'd like to congratulate my colleagues in Karandaaz for being a partner in development, both on the legal regulatory frontier and to set up the micropayment gateway system, et cetera, et cetera. So let me conclude. As I said, financial inclusion is unfinished agenda. And I count on our sponsors to not give up on us. We can take it forward and we count on their support. So urgency to adopt financial inclusive policies is critical, not only just in Pakistan, but across the world. And this is so because sorry, I need to shut this off, because the whole world and in developing countries are in grip of multiple crises. Macroeconomic contraction is hurting industry and resulting in job losses. It is at this time that we need to speed up financial inclusion. Inflation is also wreaking havoc on household budgets. Considering growing uncertainty and grim outlook, it is clear that Pakistan, as well as the rest of the world, needs new solutions to really help the most vulnerable build resilience, and nothing but empowerment through finance for the bottom and the lower spectrum is critical. Over the last decade or so, not only have the contours and products and services under financial inclusion been enhanced, but there has been a sea change in the ecosystem and institutional frameworks, modes of delivery, and interoperability. They've all really changed the ecosystem, and I am very optimistic that more innovation, particularly related to artificial intelligence, fintech, and others, will be the future drivers. Hence, at this point, we think 1/4 of the world's adult population has gained access to financial services. We better try to move to bringing it closer to universality, which is really something we used to talk about when I spent my time at the United Nations, where we dream more than others. So thank you, Vikas, for bringing me to this platform and letting me share some of the thoughts on the survey's powerful findings and pointing out to the weaknesses. But to conclude, finally, much of the growth will have to be powered from the digital financial services through greater connectivity and digital ID development system, and the big data deployment, the new types of technology that I pointed out, fintech solutions, artificial intelligence analytics. They can all promote speed, productivity, and finally, with support of Karandaaz, we do count on risk enhancement and mitigation instruments based on what we have studied through country experiences and empirical research, that in this particular area, without credit enhancement, we will not be able to make much progress. So thank you to the whole entire team and also to our sponsors. Over to you all.
Thank you, Dr. Shamshad, for your valuable insight. And now I would like to welcome Mr. Noor Ahmed for the keynote address. Mr. Ahmed has over 27 years of central banking experience. Currently, he is looking after the National Financial Inclusion Strategy, banking on equality policy, microfinance banking, and agriculture credit policy of the central bank. Mr. Ahmed has been involved in designing and implementing policies and instruments for risk sharing, institutional strengthening, and innovations to catalyze market development. Mr. Noor Ahmed, I would like to ask you to turn on your mic and please share your thoughts with us.
Thank you, Hassan. Assalamu alaikum, everyone. Dr. Shamshad Akhtar, thank you so much for inviting State Bank for Council Hassan CEO Karandaaz. I think Mahesh is left. So the story of financial inclusion in Pakistan. So it started off, of course, with the support of FCDO, then DFID, and now Dr. Shamshad Akhtar was then the governor of State Bank of Pakistan back in 2007. So there we started the journey and we coined this term within the central bank. And today, alhamdulillah, I can, for of course, the information of participants, state that there is a whole group in State Bank who's looking after financial inclusion. It has been prioritized within the State Bank objectives as well as part of the recent amendment in SPP Act as well. So things have moved far from where we began in 2007. As Dr. Shamshad just mentioned, there were about 500,000 microfinance clients in 2007. Right now, we've crossed 8 million. If we look at the number of accounts, there were 32 million accounts. There were no branchless banking. There was no digital access. Right now, 150 million accounts have been opened. So thank you again for launching this survey, Waqas and your team. I must congratulate you on successfully completing the third iteration of this survey. This survey is not only important for, of course, for market information, but at the same time, I believe this is something, a very important instrument for market development as well. And I can vouch for that, and towards the end, I would mention specific challenges where this survey can be actually of help in terms of going forward. You know, what sort of landscape that currently is prevailing in the market. So thank you for launching this survey. Every time when there is a survey launched and completed, being the head of financial inclusion department, there are sort of mixed, outcomes in the survey. So when the Findex 2021 was released, of course, we were put at the same mark where we were in 2017. So they put us at 21% of bank account ownership. I don't know what the K-FIS has put us at right now, but what gives me comfort, and I would like to share that for the comfort of the audience as well, or for the information of the audience, that we have been conducted the supply side data, and since we have unique CNICs in Pakistan, and we can actually measure the universe of bank account ownership, we can look at how many of them have been active in the last 1 year. So what has been the gender mix? All these cuts are available for policy making at the State Bank. So I'm happy to share that when the NFIS 2015 was launched back in 2015, the number of accounts was 60 million. Since then, we've launched or initiated a number of digital inclusion initiatives, and last June 2022, we had the number of accounts at 150 million. So that's the kind of scale we have achieved in the account ownership. But having said that, we are mindful of the demand side insights as well, whether it's Findex or the K-FIS survey. And then in 2017, we did the exercise of account ownership. So just to give you a number, in June 2022, there were about 78 million unique depositors in Pakistan, and I mean individual, not businesses. If we look at the adult population, 18 years plus, it'll be around 135 million in the range of in 2022. And if we were to look at the gender segregation of this 78 million account, about 26 million were held by women. In terms of the adult population of women, it becomes 39%. The male account ownership was around 52 million, which is 75% of the adult population, male population in Pakistan. The overall account ownership stood at 58%. So giving everyone sort of a sense on where we stand in terms of number of account ownership, without going into the debate that how useful these accounts, those of course there are issues that we are confronted with and we've been working on. But having said that, that's the baseline that we have so far accomplished. Now, the second point that I would like to share with everyone, that SPP efforts are now driving financial inclusion through digital means. And you must have heard, about the digital onboarding framework, the Asan mobile account, the Asan digital account. Asan mobile account is so simple that if you were to open an account, you would dial 4 digits and call that number. So through a simple feature phone, you can open that account in a matter of minutes. Similarly, we have Asan digital account, which is a branch-based account, and you can open it through web portals and of course apps of all the banks. It's offered to every Pakistani. They can open that account. Similarly, earlier than the Asan digital account, we issued EMI licenses, and I'm sure there must be some insights from the K-FIS on how many EMI accounts, but they are at a nascent state. So, of course, it will be interesting to see how many people they have included. One of the key initiatives the State Bank has launched through, of course, Karandaaz support is the RAST. And RAST, we recently, hit a number of 1 trillion worth of transactions. It has been a major transformative initiative. And finally, the digital banking licensing framework was launched earlier, again, with the support of Karandaaz. And we have issued NOCs to 5 entities, and they're in the process of rolling out those digital offerings. So State Bank has been largely active on the digital front. So where are, perhaps in terms of challenges, where do we need to focus going forward? So we have a baseline that puts us, if we use either the supply side data or the demand side, of course, the variation is very big. The demand side insights, of course, misses a lot of, aspect in terms of the inclusion. If we look at whether it's on the overall adult population level or it's male or female level, and of course the gender gap, which I'm going to talk about in the end. But then there are potential opportunities, and some of them have been, of course, highlighted through, by bringing in additional newer framework to make it convenient and accessible, for new customers to adopt financial services. Well, where are we missing, in terms of the future opportunities? So I would specifically place 3 challenges before this, and I hope the panelists will touch upon them as well. So the first challenge for me, as a financial inclusion, as what you can call it, a practitioner, is the challenge of customer awareness. So, and I think that comes through a lot of surveys as well, that the awareness level of financial services is very low. Even if people open accounts, they don't tend to use it. So if we look at the global best practices, so it is up to, of course, now the providers to, offer financial or digital financial literacy to promote these products and services as much as possible, whether they're through, of course, media campaigns or through social media or, through apps, through gamification of, some of the financial literacy, topics. So those things have to be, of course, streamlined by the providers. Of course, governments and central bank, and of course, the likes of Karandaaz can put in efforts on that front. But when it comes to, customer adoption, I think it's more credible for, people to hear it from the service provider themselves, that what sort of value proposition that they are offering. That takes me to the value proposition, which is the second, challenge. Although we have opened up about 150 million accounts, of which 78 million are unique. If we look at, the activity in these accounts, 68% of these accounts are active, 32% are inactive. So overall, on overall basis, the usage is less, but then the activity is also low. So what providers need to do is, while they're raising the awareness about these products and services, they need to create the value proposition. So that not only means the accessibility, convenience, affordability, but also, they should pick these products to bring in the behavioral change, in the customer behavior. If that doesn't happen, then all these efforts will not bring in meaningful financial inclusion. And finally, I would come to the last point, and as I mentioned, that gender gap. So where do we stand in terms of gender gap? I mentioned that we are at the level of financial inclusion of 58% overall. If we look at the male and female, so male account ownership is at 75% of the adult 18 plus male, while female is at 39. That brings us at a gender gap of around 36%. Now, this 36% is not something that can be ignored. If we want universal financial inclusion, both men and women have to be included. Otherwise, we won't get to the 100%. We will be somewhere, very lower than that. And given the inclusion level of 39%, that means 61% of women are financially excluded, which half of the population. So there will be, of course, close to around 40 million women who are excluded from the financial system. So how do we address that? Then, if we are offering products, and this goes to the service providers, and that's why we've launched the Banking on Equality policy, that if you are launching a product, which is a gender neutral product, which is very good in terms of, its digital accessibility, affordability. But if you're not wearing the digital, lens, of course, and also the gender, sensitive lens, then you may not be actually bringing in those women, attracting those women into the financial system. So we have launched the Banking on Equality policy, and under that, there are a number of initiatives, and banks have been specifically asked to target more women for financial inclusion, especially, of course, number one, through account ownership, but also offering more credit products so that they can actually build their assets. So with these comments, I see, if we look at the K-FIS survey, it has a lot of opportunities for, of course, for the market. It gives us a lot of insight in terms of, okay, where do we stand in terms of access, whether men and women, what sort of, awareness levels they have, what sort of, current usage is, what are the missing gaps. If we look at one individual particular household budget, what sort of other services need to be built into the financial products and services in terms of the digital offering to improve the customer experience and also increase more financial inclusion. So with these comments, thank you so much for inviting me, and over to Hassan, please.
Thank you, Ahmed Saab, for your sharing your thoughts. And I know you've asked questions about K-FIS and our survey results. And I feel, the next step is for that. I would like to invite Imran Khan, technical lead for the He'll be presenting the presentation on these, and hopefully we'll have time for a brief Q&A session just after the presentation and before our first panel. And for that, I would like everybody who has any questions to please mention them in the Q&A box below, and we'll try and answer them after the presentation. And a brief bio for Imran Khan Saab. He is a seasoned professional with over a decade of experience in the industry in the implementation of financial inclusion programs and initiatives. As a senior financial inclusion specialist, Mr. Khan has been instrumental in driving the implementation of the Financial Inclusion Insight Survey in Pakistan since its inception in 2013. So, Mr. Imran Khan, I would like you to please join us.
Thank you. Hassan, can you hear me?
Yeah, I'll be sharing my presentation. Just hold on.
Yeah.
Can you guys see my screen?
I can. Thank you, Hassan Saab. Can you hear me?
Yes, we can hear you. Please.
Thank you, Hassan Saab, for the kind introduction, and hello to everyone. Before going into the results, we just wanted to give an overview of the survey. Hassan Saab, if you could go to the next slide. So basically, I mean, we've already gone through in terms of the overall aims of this survey, in terms of its aim to track access to and demand for financial services, also to measure adoption and the use, and identify drivers and barriers. And one of the main features of this survey, with its sample of 6,672 individuals, is that this round, or this wave of K-FIS, we have spread from the 4 provinces now to AJK, Islamabad, Gilgit-Baltistan, and also for Khyber Pakhtunkhwa, we managed to sample from the newly merged districts, which is also a first for this survey. And one other main feature of this current 2022 survey is its focus on interoperability, which of course we will share the findings. Next slide, please. Next slide. So before going into the results, just in terms of understanding what we mean by financial inclusion, in terms of defining the financial inclusion, we look for adults with financial accounts in fully serviced financial institution. Now, what do we mean by that? By adults, we mean persons above the age of 15, and also in terms of the full suite of financial services, we look for institutions that offer savings, credit, money transfer, insurance, and investment. Given that definition, then accounts in deposit-taking microfinance institutions are counted towards the count of financial inclusion. But if it's a credit-only microfinance institution, then we don't count those towards financial inclusion. Next slide, Ji. As Shamshad Saiba already said, the main estimate from this slide is the 30% level of financial inclusion, and this is a major increase compared to 2022. But what we have seen in 2022 as well, that after COVID, there has been an increase in adoption of these services, and we see this push being driven by mobile money. Next slide, please. But that 30%, when we spread it across the different regions, we see a maximum or a high of Islamabad, which is estimated to be 45% of financial inclusion, while on the other hand, there is a low of 14% in Balochistan. So there is a regional variation in terms of the level of financial inclusion. Apart from regional variation, there is also the gender gaps, and these are stark gender gaps across all the regions. And at the Pakistan level, our estimate is around 34% in absolute terms. Obviously, I mean, in proportionate, then it becomes a different figure. But in absolute difference, it's a 34% gender gap. Even in Islamabad, which has the highest proportion or the highest financial inclusion for women, the financial inclusion for men was 17%, but in comparison for men, it was at 62%. So gender gaps persist across all regions. Next slide. When we zoom into then on the gender basis, we zoom into particular these service providers, whether it's NBFIs, banks, or mobile money. Again, we see there are gender gaps in all sort of registration. While we see a very healthy increase in the adoption of mobile money amongst women, the percentage has risen from 2% to now 6% in 2022. But at the same point, the male financial inclusion is also increasing at a much higher pace. So the gender gap situation is maybe similar at times, in some instances deteriorating. Next, Anji. Next slide. So active registered, एक slide पीछे. So active registered users. So how we define active registered users are those who use their financial account at least once in the last 90 days, and last 90 days from the day they were interviewed. And that again, I mean, it's sort of with the increase in account registration, the increase in active usage is also as a percentage of Pakistani population is increasing as well. Next slide. So we been tracking these, what we call the readiness to adopt DFS, digital financial services, these 7 indicators, and they're quite intuitive, like the presence of an CNIC, mobile phone access, owning a SIM card, ability to send or receive a text message, financial literacy, basic numeracy, and mobile money awareness. We track these in terms of to see where the lack of readiness exists, and indicators where everyone is like the results are good are basic numeracy, in which we ask questions about addition, subtraction, basic mathematics, and then the availability of CNIC. But where it's lagging is financial literacy, and here we ask about concepts like interest rate, inflation, risk diversification, and also the ownership of SIM cards. And that for women, that's where the gender gap is quite substantive, where 82% of men we found that have a SIM card, but the ownership of SIM cards amongst women is quite low. So another gender gap apart from financial literacy that is one to watch out for. Next slide here. So the focus of this section, survey is the interoperability, and this section was developed with the help of our friends at IPA. So this slide, just to explain the slide, ideally this should all be in dark blue, like everyone should agree that these transactions happen. So what we did was we asked the respondents about these different transactions between EMI accounts, mobile wallet accounts, and then mobile money wallet and bank accounts of different providers. So the same type of institution, but different providers. And one thing that we saw is the level awareness about EMI is quite low, which is understandable because it's a recent phenomenon. But when we asked about mobile money wallets and banks, when we asked about things like, do you think it's possible for a mobile money wallet to transfer to another mobile money wallet as an easy paisa to Jazz Cash? The understanding was, or the awareness was high in terms of 47% for banks and also 42% for mobile money wallets. But when we proposed the question whether it's possible for a bank account to transfer, make a transfer to mobile money wallet account, that's where understanding dropped by almost 10%. So that's one level where awareness could be seen, could be increased. Next slide. Then we looked at multiple financial account holders, and we found that 9% of Pakistanis have multiple financial accounts. And this multiple financial holding account holding is more likely to be in the form of 2 or more mobile money wallet accounts rather than having more than one bank accounts. And we also saw that is the gender gap in terms of this as well, like men are more likely to have these multiple accounts. But one determining factor is the higher education group, which will factor into other issues as well. That the higher education group, almost 1/3 of them had multiple financial accounts. And the reason for multiple financial accounts, again, was that you would want another account was registered because they wanted to make transaction with someone who already had that account of that other organization. So that was the main reason for 32% reported that reason. Next slide. Then cross-institutional transfer, we found that 13% of the financially included used their financial accounts to transfer money to an account in a different financial institution from their own. Could be like mobile wallet to mobile wallet, another type of mobile wallet, or to even to a bank account. And the top reason for doing so was to send money to family. That's a major. But the very interesting other one was 31% reported that they did it to pay a merchant. So this is a P2P transfer where at a shop, like instead of cash, this transaction is taking place and people are getting paid for their goods or services. Next slide. Then in terms of network preferences, and here we're looking at mobile money wallet users. What network do they prefer? If they're EasyPaisa users, would they prefer to interact with someone with an EasyPaisa account or someone with a JazzCash account? And what we really was interesting was that when we looked at the behavior of basic users, these are users who are just using deposit, their accounts for deposit, withdrawal, and then advanced users who are doing more like savings and borrowings and other complicated stuff. These two users, the advanced user were indifferent about network preferences. It didn't matter to them whether they were interacting from a EasyPaisa to a JazzCash or from JazzCash to EasyPaisa. But the basic users, 50% of them preferred the same network. And the reason that they gave was the ease of use. So that's something to, I mean, these apps are quite intuitive, whether it's JazzCash or EasyPaisa. But for basic user, even that is sort of considered to be a difficult transaction. Next slide. So so then we went on to ask about Rust, and Rust has already been mentioned here. So what we found was the overall level of awareness about Rust. 11% of adult Pakistani knew about Rust, and this awareness again had a gender gap in terms of men was more informed. 16% of male and 5% of female said that they understood the brand of Rust. When we mentioned the brand, they had. But one very interesting finding was that there was a correlation in terms of level of education and awareness about Rust, where we found that the higher education group was very much aware of Rust. Around 39% knew about Rust, whereas those with no formal education, around 1% knew about Rust. Next slide, G. So then those who were aware about Rust, we asked them about the source of their awareness. And for 48.7%, that source was their mobile money app, whether it was a bank app or a mobile money wallet app, but that became a source of awareness, followed by TV advertisement. But this is like in overall terms. When you look at specific demographics, these sources vary. So when we asked the higher education group, which was also the most informed group, for them it was the mobile money app. But when we asked those with no formal education, their main source of awareness about Rust was TV advertisements. And 40% of them said that we found out about Rust from a TV ad or campaign. Next. So in terms of Rust user, again, there was a gender gap, 13% men and 1% female. What we found was that 35 to 44-year-old age group, that had a markedly higher adoption or usage of Rust. Again, the higher education group was also using Rust, and there was more use in urban areas than rural ones. Next slide. So the reason for using Rust, the main reason was to make speedy payments, and safety, convenience was also, and to receive speedy payments and to make speedy payments, like both of them was main reason. And in terms of the frequency of using Rust, we found that most users were using it at least once a week. Next. So this is an interesting site that it covers around a decade worth of surveying that today has culminated in K-FIS. So we're looking at the level of trust in 2013 and comparing that with the level of trust in 2022. What we did was we asked about the different types of financial institutions, and we asked whether you would fully trust them or trust them. So this is a percentage of those Pakistanis who fully trusted or trusted these institutions. And what we see is a marked increase in the level of trust for all types of financial institutions, and specifically significant has been for mobile money services and mobile money agents. In 2013, like it was 1/3 of Pakistanis almost would trust them, but now it's gone significantly, and this owes to the proliferation in the usage of these financial services. But state-owned bank and private banks, they sort of enjoy the highest level, still enjoy the highest level of trust. Pakistan Post is another one that trust level has increased a lot. The Hawala Hundi was the only informal institution that we asked about, and it's pretty much the same. Next slide. Here I'll end my presentation, but I'm leaving you with the contents of our report. As you can see, we could only cover so much in this time, but I strongly encourage and request you all to look at our findings and give us your feedback. Thank you very much.
Thank you so much, Imran, for this wonderful presentation. And while we wait for the panelists to join us for the panel discussion, let me see if anybody has any questions in the comments. Guys, we don't have much time. So if anybody has any questions, please mention them in the Q&A box below, and Imran will try and answer them before the next panel joins us. We only have time for one question. Hassan ne pucha hai, why do you think that there is a difference between the FI percentage reported by Findex at 21% and that reported by the FIIs at 30%? The Findex data was collected in December 2021.
So, I mean, one, a lot has happened since then in terms of the impact of COVID and how these new financial behaviors have sort of set in. The sampling approaches might be different, but we are also covering the areas in Islamabad, Gilgit-Baltistan, and Jammu Kashmir, and they've also, what we saw is they were one of the areas with the highest financial inclusion levels. So there are comparability issues in terms of the sampling strategies and other strategies, and these need to be looked into more detail.
Thank you so much, Imran. Unfortunately, we only had time for that one question. And as for somebody who had asked about data being public, the presentation will be uploaded on our, the report will be uploaded on our website shortly after this webinar. It can be found in the publication segment, and the data will be uploaded on our data portal in this month. And now I would like to move on for the panel discussion. For that, I see we have all our panelists on board, and a brief introduction about them. Ms. Miriha Hussain will be moderating this panel titled Narrowing Gaps in the Financial Inclusion of Women in Rural Populations. Ms. Hussain is an economist with a broad range of development experience in a range of sectors, including agriculture, irrigation, microfinance, financial inclusion, social sectors, including social protection, gender and women's empowerment, community participation, access to justice and governance. Our panelists include Dr. Rashid Bajwa, CEO of NRSP, which is Pakistan's largest rural development organization. In 2011, Dr. Bajwa successfully established the NRSP Microfinance Bank. Today, it is the third largest microfinance bank in the country with 145 branches. Microfinance Bank to have been given an Islamic micro banking license by the State Bank of Pakistan. We also have Mr. Mohammad Aurangzeb, who is the president and CEO of HBL. Prior to his responsibility at HBL, Mr. Aurangzeb was the CEO for JP Morgan's global corporate bank based in Asia. He is also the chairman of the Pakistan Bank Association, chairman of the Pakistan Business Council, and council member at the Institute of Bankers Pakistan. We also have Ms. Inez Murray, who is the CEO of the Financial Alliance for Women, which is an international trade association of financial services driving women's wealth creation worldwide. The alliance provides members with a unique platform for peer learning and networking. She has also been engaged with Kash Foundation in the past. And lastly, we have Halima Iqbal, who is the CEO and founder of Quran, UDAN is focused on enabling access to finance for underserved communities, especially women. By June 22, the UDAN ROSCA platform was being used to support and manage over 4,700 committees, with more than 60% of the committee members being women. So now I would like to request Ms. Maliha to take a hand to start this panel.
Thank you very much. I think we have a very illustrious panel with us today. And honestly, I feel that we are among the family of those who undertook this task of financial inclusion in Pakistan many, many years ago. So it's really wonderful to see all these familiar faces, people that we haven't interacted with for a few years, but it's wonderful to be among them. I'm going to actually use the financial inclusion survey of Karandaaz to sort of ask a set of questions, because 2 or 3 things are very clear. I mean, naturally, how you formulate the solution towards financial inclusion depends on what kind of problem you identify. And there's always this friction. Is financial inclusion a demand side problem, or is it a supply side problem? And perhaps the answer lies somewhere in between. But I think we can capitalize on the experience of the panelists here to launch into that. I want to pick up one of the first findings that I found in the current survey, which is, you can see that the growth to a large extent is being driven by digital financial inclusion. And the question that I would like to raise, and perhaps maybe I can first start with Dr. Rashid Bajwa, who has really come full circle. He started off focusing very much on rural areas, focusing very much on women's financial inclusion, forming these small informal groups, which very quickly the idea grew. He's now got one of the biggest banks in the country, the microfinance bank. And the question that I would like to pose to him is that, where do you come in over here? What is your experience? Is it a demand side problem? Is it a supply side problem? We've also seen in the financial inclusion survey that there is large differential in the geographic zones. So is that driven by certain innate characteristics of that region? I mean, AJK has one of the highest literacy rates, so does Gilgit-Baltistan, and so does Islamabad. So is demand for financial services linked to literacy? Is it linked to employment? Is it linked to remittance incomes? Because in these areas, that is also a feature. So if we want to, and my third question really is about agricultural finance overall. That we've seen that the agricultural sector, which perhaps is the largest employer of women in Pakistan, if you sort of multiply or see the numbers that are given in the survey, only 4% of those who borrow in the agriculture sector borrow from a formal financial institution. I can tell you how I got this number, but it is data from within the financial inclusion survey. So my question to Dr. Rashid Bajwa is that you've seen this whole circle of what kind of institution is best able to serve rural areas and women in particular, especially if you want to get to that level of granularity. What is it? What has been your experience in this area? Thank you.
Thank you very much, Maliha, and very warm welcome to everyone. And as usual, Maliha is asking the most difficult questions from me, so I will try to answer. First of all, let me congratulate Karandaaz and, of course, Waqas Ul Hassan to have successfully launched this report. This is really eye-opening, and perhaps the country needed this to do kind of a policy introspection of where we are in terms of financial inclusion. Now, the primary question being asked is that, is it a demand or a supply side issue? I think it's both, as you rightly say, Maliha, and I can give you certain pointers towards that. I mean, although in terms of supply, I think the central bank, State Bank of Pakistan, has done a tremendous job, and it is with open arms. It has have been able to discuss the policy measures and have taken the correct steps in order to create an enabling environment. And I think Pakistan, in that sense, perhaps is one of the leading countries globally also, where the supply side issues have been sorted out. And we were just talking about the Asan digital account and how easy it is to be opened up. But I think there are issues relating to our own socio-cultural menu. I think giving a mobile phone to a woman is a taboo, and it still is a taboo. Giving a smartphone to a woman is a bigger taboo. So here we are. And so perhaps if you look at the feature phones penetration, this would perhaps be more. But when it comes to the smartphones, the penetration obviously is less. It's not a question of cost. I think the cost of internet in Pakistan and the cost of using phones is one of the lowest in the countries. I think the issue is not of affordability. The issue is of the socio-cultural norms, and the other, of course, is physically the outreach is low. I mean, if you look at if I see it, rural versus urban, there is a big gap. And one of the things is perhaps there is a prejudice amongst the financial institutions themselves. I'm sorry to say that, but the prejudice comes from the fact that if you look at how many women credit officers, even in microfinance banks and in microfinance institutions, you will see that it's on less than 10%. And they claim that they are serving more than 50% are their female clients. So there is a gap, there's an issue around the prejudice. And unless and until that barrier is broken, I don't know how it will be broken, but unless and until that is done, the movement towards women participation will perhaps be lacking. Then, of course, you touched about agriculture financing. And there is a lack of expertise on how to actually do cash flow analysis. Agriculture financing by the microfinance institutions are actually on a decline post-COVID. And we are seeing portfolios of microfinance banks who have been doing agriculture credit, particularly clean credit, are actually in a lot of trouble. Another very important area back to the sociocultural norms is the ownership of the mobile phone. And the ownership obviously is with the male, whether it is the husband or whether it's the elder brother or whoever. It's never with the female. So if the female wants to talk or use the phone, then she has to request or ask the permission. And generally, it's being monitored by one of the males or other elderly female.
Dr. Rashid, sorry for interrupting you. Can you please speak a little louder or bring the mic closer to you?
Can you hear me now?
Yeah, it's much better now. Thank you so much.
Okay. So what is the recipe now? And I think this is very important to look at the recipe. One is that why is it then men offer products to women versus women offering financial products to women? And this whole, issue around, how many men do you employ versus how many females do you employ? It's very important. It is no longer an issue of competency. I think if you ask me, Maliha, I think women as we speak now are perhaps much more competent than men are in terms of an overall, if you look at the overall scenario in all fields. So, and if I talk about rural areas, there is no village left where you cannot find an educated woman, at least bachelor, matriculates, or even now in intermediates and bachelors. And so it's just a kind of a blockage in our own mind. But Akhtar Amir Khan used to say the psychological barrier. So that psychological barrier has to be broken, first of all, so that women can offer financial products to women. And it would be much easier to do that. For that, of course, the financial institutions will radically and drastically change the gender HR policies. We did a project with Google. This was called Access to Internet, and so they introduced this. There were two products. One was Internet Dost, which was like introducing internet and its benefits, and the other was Internet Zabardast, which actually also talked about the negative side of internet and how to safeguard yourself. And I was surprised that there were female trainers whom we trained, and they were what you call the community resource persons, went into the villages, and there was a tremendous success in it. Not only from the confidence level of the females, but also confidence level of the males when they found out that, openly talking about the negative sides of internet and how to avoid them. So I think this is a key to if we are going to crack this issue. Another very important issue is that one needs to look at and use, if we want to increase the footprint, we need to use organizations who already are working in the rural areas. And in Pakistan, we are fortunate to have the rural support programs. There are provincial and the national rural programs. And I think they have a significant footprint and they can be used if somebody is interested in improving this divide, the rural and the digital and the gender divide. And then, of course, I don't know why microfinance products which are being offered, they are not linked to the Asan digital accounts. I also sometimes feel that, it's time perhaps that you make it mandatory that if somebody is going to apply for a loan, then the loan has to be linked to, so it's not, so it has to be a conditional loan, and the condition would be that, this person should open up a Asan digital account and also to use it. It's not just that a digital account is open, it's very important to use it. We have seen that happening, that when cash transfers have been made in bank accounts of women, if they don't use the account for 6 months, obviously these accounts become dormant. And the commercial banks and even microfinance banks are not interested to actually open these accounts because there is a cost to opening an account and there is nothing in the account left for them to have what I call a float. So there is a cost to it, and obviously they shy away from it. So to me, these are some of the steps which can be taken if we want to move ahead on this whole very tricky issue. Thank you very much, Maria.
Thanks a lot. I'm not going to turn on my video because I understand that there is some kind of an interference in that. I would next like to turn to the CEO of Oran, Halima Iqbal, who's got extensive experience. She has been working very much on women's inclusion through digital financial services. And as we've seen, that while there is rapid growth in this area, one of the questions that there is, Rashid, what you've also hinted at, is what are we actually, we've got women to register, we've got men to register. This seems to be the fastest growing area. But what is on offer for them? Are we doing enough? Is it just a question of offering, or as Rashid pointed out, it is also what is the modus operandi of offering these services? So Halima, if you could give us your experience and insights on that, that would be very useful. Thank you.
Thank you so much for having me here. It's a pleasure sharing the panel with all of you. And great report. There's some really great things. I think what you had asked in terms of is this problem the
Halima, we're not able to hear you. Is it only
while
yes, Halima, आपकी आवाज हमें नहीं आ रही.
it has not moved.
You're breaking up.
In difference from the crisis financial exclusion that we look at in Pakistan. And supply side,
I think Halima has dropped out, but hopefully she'll join us momentarily. I think we can move on to another panelist till then, Ms. Malia.
Certainly. We can next turn to somebody who's extremely experienced, someone who's got extensive experience of the formal sector. And really, at the end of the day, our hopes lie with the formal sector because it is the largest sector. And unless the formal financial sector breaks the code on how to increase its accessibility, we're not going to really have the kind of wide financial inclusion that we're hoping for. The next panelist is Mr. Mohammad Aurangzeb. He's President and CEO of Habib Bank Limited. He's got extensive experience of trying innovative and new things. He was also CEO for JP Morgan's Global Corporate Bank based in Asia. He's got a lot of experience of working with a wide range of institutions. Within Pakistan, he has tried to do some very innovative things as far as the banking sector is concerned. So my question to you, Mr. Aurangzeb, is that why is there such slow growth in financial inclusion on the formal banking side? The Financial Inclusion Service shows that in the last 2 years, there's only 4% growth from the formal financial sector. What is it that this sector can do, which it's not doing? How can it get rid of its conservative, risk-averse strategy and very low appetite for the agriculture and rural sector, and particularly lending to women where there are extensive collateral arrangements and so on? How do we make the formal financial sector much more innovative than it is? Thank you.
Yeah, thank you, Malia. And I would like to start by again paying compliments to Karandaaz. I think it was important to do this dipstick and temperature check in terms of where we are in Pakistan vis-a-vis financial inclusion. So, Malia, just to dispel some of the comments that you have made, whether the formal banking sector is is not stepping up. You see, in the last 3 to 4 years, and especially during the COVID period, as someone has said, that there are decades where nothing happens, and then there are weeks in which decades happen. And that's exactly what we saw in terms of the client buying behaviors, in terms of digital adoption, and then the supply side sort of came in as well. So just, giving HBL, we are the largest bank in the country. It took us 70 years to get to a client base of 12 million. That was 2018. We closed end of last year at 32 million clients without adding any single branch or brick and mortar presence. And it's all because of the digital journey, right? It was, it's mobile first, data driven, and various offerings which came through that. Now that is at an aggregate level. Let's come to women. We have 5 million accounts. We have a specific brand which is called Nisa, which is focused on women only, and we are trying to break it up in terms of entrepreneurs, those women who are homemakers, and try to tailor make some of those offerings to these categories. So we have roughly 1 million women account holders now in Nisa, and this portfolio has actually grown by 60% over the last 3 years since the time we sort of rebranded it at Nisa. But it's not only at the upper end. We are dispersing 80% of the Benazir income support program, the subsidy which the government gives out, right? So in some sense, this is the lowest rung in the totem pole. And here it'll be interesting for you and the audience to know that while we are dispersing this 10,000 rupees or 12,000 rupees or 7,000 rupees, a lot of women have now come in and they're saying, don't give me the entire cash. And although they have feature phones, etc., they are now converting it into mobile wallets. Because unfortunately, some of the situations that Dr. Bajwa was referring to, that's exactly what these women are experiencing. That when you give us the entire cash, my husband takes it away, my brother takes it away, my sons take it away. And therefore, I don't need all the cash, and therefore they are actually going into mobile wallets. And quite frankly, this is very heartening in terms of financial literacy, and we are spreading more awareness around that. Now, the other one that you have referred to is agriculture, and there you are right, because a lot of the banking sector, including us at HBL, we were just focusing on crop financing, and we were ignoring, which is 70% of the agriculture GDP of the country, which is dairy and livestock. So over the last year and a half, we have now focused on that, and our portfolio has grown to about 2.5 to 3 billion rupees. But the way I look at it, we are just scratching the surface. So we are getting out of that, laggard mode and sort of moving in the right direction. The interventions that you're referring to, I think are for us are very, very important. And it's how do we take the informal sector? We cannot take it out, the role of the aartis or the middlemen, but we can certainly mitigate it if the banking sector steps up. And what we have done in the last couple of years is interventions around maize and around rice, and now we are going into cotton, where we go into a closed loop. So for the small farmers, we have said, we'll give you the inputs, so the fertilizer and the seeds. We'll provide you the agronomy and the mechanized services, and we'll ensure your offtake is being taken away. And all we have done is we've connected the dots among our clients. Now, because we have taken the aarti out of the picture, the income that has gone into the small farmer's pocket has gone up by more than 100%. The crop yields, given the agronomy and the mechanized services, has gone up by more than 20%. And it's not HBL saying it. We requested Princeton and Professor Atif Mia to come and independently validate these results, which they have, and we are very grateful to them. Now the question is scaling it up. So I can tell you, we have applied to the State Bank of Pakistan to set up a separate subsidiary. So all non-financial services, agronomy, mechanized services will go into that subsidiary. We will call it HBL Zarai, and we will then make it available to all our clients in the farming community, and at a point in time also to the third parties. The last thing I just want to mention is the SME element as well. And that is where, again, Malia, to your point, where the banking sector had not been stepping up. And the reason we had not been stepping up is we think collateral first, right? Especially when it comes to the S part of the SME. So what we have done over the last 12 months is that we have now focused on cash flow lending. So get away from that discussion, we have looked at the value chain, we've looked at the supply chain, and that portfolio is now sort of beginning to grow quite handsomely as well. So I do think we are moving in the right direction, Malia, but we have a long way to go. And I from my perspective, it's not only just HBL. Quite frankly, the entire banking industry, including the microfinance institutions, we need to continue to step up so that we can get away from the cash economy, we can get away from the parallel economy, and things can move faster into the formal economy. Thank you.
Thank you very much. Very apt and appropriate suggestions. Last but not the least, I'd like to introduce Inez Murray. I haven't met her for a few years now, I think, Inez, it's been.
That's right.
Yeah.
Nice to see you.
Inez is CEO of Financial Alliance for Women, but more importantly, she's also a friend of Pakistan. She's come here on several occasions to help some of the organizations who were struggling to get to a certain level of growth and so on. Inez can richly contribute to this discussion because one of the mandates of the organization that she's working with right now is peer learning and trying to come up with lessons and recommendations and share her experience on how organizations within Pakistan can learn from that. Now, Inez, one of the things that I would like to talk to you about is, you've seen, well, the whole world is in a bit of a turmoil. Pakistan more so, you've seen what is happening to the exchange rate in this country. There were floods. There is a lot of uncertainty. All of this has further multiplied at the end of COVID. COVID already put many of these organizations in a tailspin. And, with non-performing loans growing, with risk, many of these organizations are very risk averse naturally. Now, what are some of the lessons then, if we then tell them that, okay, now you have to go and find the hardest to reach clients, you have to go and give women loans, you have to go to the rural areas, you have to, do much more than what you're doing. These are conservative institutions at one level. What are your findings on this? What recommendations and lessons can you bring forward for us to at the same time include financial inclusion for these sectors, but also recognize that this is a hard task?
Thanks, Malia, and thank you to Karandaaz, not only for inviting me to this prestigious panel, but also for an excellent piece of research, which I think is really setting a precedent in terms of the level of granularity you've gone into and trying to get to some of the answers. Before I go to kind of what has happened from, let's say, a global perspective, lessons learned from the banking response to COVID, let me just touch on a little bit on the kind of role that digital financial services are playing in including women. So if you look at Findex in the last Findex survey, you really saw the main driver of a massive increase in the number of women coming into the formal system is in fact digital financial services. So both previous speakers have alluded to the importance of this digital financial service. And we actually did some research in 2021 into fintechs and the female economy to understand why the gap in use of fintechs globally is 3 times as high as the gap in use of mobile wallets. And what would happen if, to the bottom line of these fintechs, if in fact they had gender parity through their sales funnel. And what was extraordinary really was that once you get women into a fintech, you're seeing behaviors as a customer that are very, very nice looking from a financial perspective. So women tend to be very receptive to buying multiple products because she's basically the chief purchasing officer in her household. So what you're seeing is very strong lifetime values. So the beginning, the cost of customer acquisition can tend to be higher, but then as you're going through the sales funnel and looking at her lifetime value, it's actually increasing and surpassing that of men over time. So part of this issue for senior management of banks and so on is to understand the business case for targeting women. And this kind of granular look at and where women are placed and how they can be supportive is a very useful input to that. And so what we did was we looked at the sales funnel of fintechs, which goes from awareness, consideration, approval, loyalty, and usage, and looking at the percentage of women at different stages of that sales funnel enabled us then to look at the money that was left on the table by not having gender parity at each of these, but perhaps more importantly, to look at some of the emerging use cases of successful fintechs that do in fact have gender parity. And there's interesting themes here. For instance, women's trust level in financial services providers globally is much lower than men's, right? So there needs to be a lot more work in cultivating the female customer base initially up front. And what we're seeing is really great models. For instance, Shiro's in India reaches over 20 million women. It's a community platform where a woman can buy and sell, have a very, very low cost digital storefront, but is connected to peer groups of women that have similar interests and so on. And it's really a community that then over time, you're superimposing financial services on that. So this whole upfront awareness and so on is super, super important, and the establishment of community. And within those systems then, within those platforms, you're able to do a lot of that financial literacy upskilling and business upskilling and so on and so forth. So what we're seeing is this emergence of, these community platforms that are then cultivating the customer base to then go on and take up financial services. And what's very, very interesting about that is that the AI approaches that are being used or integrated into these are enabling the providers then to understand what is effective and what isn't in terms of upskilling the customer and increasing her profile or share of wallet in terms of in the system. So there's a great report that I will say so myself that we did on gender intelligent fintech design and how fintechs can capture the female economy. You can see that on our website. I think there's some very interesting models. In terms of COVID and the global response to that, we actually surveyed our members throughout the pandemic, and perhaps some useful insights there. Obviously, in more OECD countries, you did have a lot of government intervention. So the main focus of the banks was really supporting the SMEs. In emerging markets, we did see involvement, of course, of the MDBs and the IFIs. But really, the whole point was to enable and ensure that financing kept going through the pandemic, and offering a lot of loan amelioration packages and moratoriums, et cetera, to support those SMEs get through it. I will say, however, that did not really trickle down into the micro space. So if you look at a survey by IFC, you're only seeing 13% of MSMEs globally, whether male or female, actually access pandemic support. So that was a very rough patch. But what I do see, and what we have seen, is, as the gentleman referred to, a real acceleration to digital. And with that acceleration to digital, a real offering of non-financial services, which are super, super important for women. So we see that trend. So emerging fintechs, really the acceleration to digital, which the State Bank of Pakistan is also encouraging, and interoperability. And really the articulation of the business case, creating more awareness of use cases, bringing in examples and models from other countries, and really cracking the nut so that more and more women can get included. I think in a cultural context like Pakistan, men are always going to be first in the queue, but I think in parallel, simply by gender disaggregating your data and understanding what are the barriers, and bringing in some global experience, but also local experience, of which there is a lot. I think there's a way of cracking this, but it will take political leadership. There's a lot of good directives from the banking on equality regulations coming in from the State Bank of Pakistan, but it does take leadership, and it's the CEOs like the gentleman from HBL that are necessary in driving this inclusion. It's not going to happen through osmosis. It's going to happen from political will and business case, and using all our hearts and minds to get behind it.
Thank you very much, Inez. Very, very important points. And I'd also like to thank some of the other panel members for their deep insights into, clearly it's a complex issue. It requires multiple layers and tiers of solutions. I'm going to hand back to Hassan. I understand we are a little short of time. Hassan, over to you for any questions that you might want to field at this stage. Thank you very much.
Thank you so much for this enlightened conversation. It was, interesting to listen into this. We do have time for one question, I think, while we wait for the next set of panelists to join us. This was asked by Qasim Khan. He said that how would the launch of new digital banks help in financial inclusion? If anybody would like to answer this, please unmute yourself and please take this.
If I may, I'll just jump in for a while. You see, we have to just think through, whether these are conventional banks or the new challenger banks. Digital is not an end in itself. It's a means to an end, and the end is what we've all been discussing, which is financial inclusion, and that financial inclusion by being better, cheaper, faster. That's what it is. So I think from the traditional banks, we welcome the new banks who have been given the licenses, but there's so much to do in this country that whether these are challenger banks or banks like us who are coming and launching our digital offers, we all have a long way to go. But it's all about convenience for the clients and making their customer journeys, as I said, better, faster, cheaper.
Thank you so much, Aurangzeb Saab. I think we have our panelists for the second session. I think we're short of few, but I think let's take another question till then. Let's see. Okay, this question was, what will have long-term strategy for financial inclusion as like population, poverty, awareness? This is relevant to this. Let's see. I don't think we have any more questions, and let's move on to the next panel then. Thank you so much for your time, Ms. Maliha, Mr. Aurangzeb, Inez, Halima, and Dr. Rashid.
Pleasure.
Thank you.
Thank you very much. Thank you. It's a pleasure.
Thank you so much. And I would like to request the next set of panelists to please turn on your cameras. Sajid, if you can hear me. Yes, perfect. Thank you so much. And I'll just give a brief intro and then I'll hand over the mic to Shurjeel. Our next panel is titled Scope, Status, and Next Steps. This will be moderated by Mr. Shurjeel, who has 16 years of diverse digital and IT transformation experience. And while at Karandaaz, Shurjeel has successfully delivered in the roles of Associate Director Digital Transformation and Head of Digital Transformation projects prior to being appointed as the Director for Digital Financial Services. And I believe we have Sohail Jawad Saab, who is the Executive Director of Digital Financial Services Group of the State Bank of Pakistan. He is responsible for creating development strategies and regulatory policies around technology innovation in digital financial services to manage risks, enhance efficiencies, and strengthen competitiveness in the financial and payment services sector. Mr. Javed has played a key role in the implementation of RAS, as well as the implementation of Roshan Digital Account Scheme. We also have Ms. Noreen Hayat, who's a serial entrepreneur and who has closely worked within the microfinance sector. She was the co-founder of the Tej Financial Services, which became the first fintech in Pakistan to be granted a non-banking financial company license in 2018 and was later acquired by Zoot Pay in 2022. Her expertise is supplemented by her experience in credit ratings, digital lending, e-commerce, and risk. We have Russell Toth, who is a senior lecturer at the School of Economics at the University of Sydney. He is a development microeconomist focusing on the development of the private sector. He is one of the primary principal investigators on the Interoperable Payment System Research Initiative at IPA, which is focused on Myanmar, Pakistan, the Philippines, Tanzania, and India. He's also a member of SERP. And also we have Mr. Mohammad Yahya Khan, who is the Group Head Digital Banking at Bank Al-Falah. He has over 25 years of banking and non-banking experience with leading organizations like ICI Pakistan, Anglo Chemical, Unilever Pakistan, and JP Morgan Chase Bank and Telenor Bank. Lastly, we have Mudassir Akil, who has played a pioneering role in Pakistan's fintech industry. He currently serves as CEO of Easy Paisa Telenor Bank, a Telenor and Group-backed mobile platform with 11 million monthly active users and transactional throughput amounting to 4% of Pakistan's GDP. And I think with this, I would hand over the mic to Shurjeel. Shurjeel, please.
Thank you very much, Hassan, for the introductions. Assalamu alaikum and good afternoon, everyone. So first of all, I would like to warmly welcome the very accomplished panelists that I have today. And I see it as a great opportunity to discuss an important subject with these experts, which is the interoperability of the systems and how it actually contributes towards growth of digital financial services in the economy. We all are aware of many global examples where interoperability has played a pivotal part in terms of adoption and confidence building amongst the users of the digital financial services space. In Pakistan, I think the very first interoperable intervention we all saw was back in 2014 when branchless banking came into play. It was a groundbreaking thing at the time, and more recently we have made some substantial growth in this space with the introduction of RAST, which is the Pakistan's first interoperable payment gateway. So with RAST in view, there is a lot of buzz in the market space, in the overall landscape. There's a lot of excitement going around. And amongst all, sometimes we tend to move away in terms of our focus on the importance of bits like interoperability. On that subject, I would like to get some very useful and expert views from all the panelists today, and I'll be asking certain questions that they can shed some light on. So I will start in no particular order with Mr. Yahya Khan. Assalamu alaikum, Yahya. You as the group head for digital at Bank Al Falah, I would just like to have your insights on, the actual. It's known as a problem that Pakistan is a cash-friendly economy, or a country, I should say. We have approximately 30% of cash in circulation. That coupled with the very genuine problem of low financial literacy are seen as the key reasons for uptake of digital financial services. Bank Al Falah has had a strong presence in the digital financial space, but several regional banks state that onboarding of clients, many banks have actually raised this concern, I should call, that onboarding of clients is generally the factor which is requiring bigger investments than the tech infrastructure itself. I would like to understand, and I think all the attendees would like to understand, what in particular is Bank Al Falah or any of the other major market players that you know about are doing to enable the digital onboarding. And more importantly, once the onboarding is done, how are we ensuring or trying to ensure that the accounts get utilized, especially in the far-fetched areas of Pakistan, where financial literacy again comes into play.
Great, thank you. So hello everyone. So look, I mean, even before the onboarding, the real issue is whether the product has the suitability to the segment of the customers to whom we are targeting, and then whether we are contextually targeting the customers correctly. So first of all, in any market, and this is not specific to Pakistan, the product has to be able to solve a real problem. And we have examples of the people who represent the organizations here on this panel, where the products are actually solving a real problem. And when the product is solving a real problem, the onboarding in itself, and then more importantly, keeping the customers active, become so much that easy. As for so A, solving the real problem, B, then obviously having or targeting the customers who are contextually correct in a contextually correct manner. And then obviously the onboarding experience and how seamless the onboarding, the user interface and the user design is, what mediums we are using, whether it's the app or internet or USSD or SMS, any of the digital mediums, or IVR even, which mediums we are using, and what is the user interface and flow there. As you may be familiar that most banks and financial institutions have been working with the central bank here in Pakistan in getting some of the user onboarding experiences and the regulations streamlined as much as possible. Starting off with, you mentioned the mobile wallets first, and then I think the major intervention was when the Roshan digital accounts were announced, and where the non-resident Pakistanis could actually open a full-fledged account in a Pakistan bank sitting outside Pakistan. I think that's where the real innovation took place, performing all the AML, KYC checks, all the other FATCA checks, all the other compliance checks, and then ensuring that we know enough about the customer, and the customer is indeed the same customer that he or she claims that they are those customers. I think we're also very blessed that we have an institution such as NADRA in the country where majority of the population has a database available, while the rest of the world contemplates whether having an ID card is invasion of privacy. In Pakistan, we have over 96% of the population covered through that database. So so that happened, and I think then the financial institutions also developed other technologies such as using biometric through the app with the use of camera and heat and motion sensing technologies. So that all happened. So I think Roshan Digital Account was the first intervention, and then the flurry, it opened those gates, and then the flurry of all the rest of the accounts happened. And now, as you're probably familiar, that the central bank has issued the guidelines for opening Asan digital accounts, and that momentum is being created. And then the full-fledged digital accounts, and that momentum has been created. And very recently, the draft regulations have come out for opening business accounts via digital channels. So I think all that is happening. So that has in itself, the answer to your question is that has eased the user experience of onboarding to a greater degree. Sometimes this is agent or merchant assisted. The other times it's done by the user themselves. Then there is also another regulation. We mustn't forget the merchants that the central bank issued about the merchants onboarding. It's called digital merchant onboarding. So now any payment acceptance merchant can also be onboarded using the digital mediums. Those customers engaged. And look, once again, it goes back to whether the problem that we are solving and the product is the right product for that customer.
Sorry, I think we have lost you there. If you can hear us.
Can you hear me better now?
Yeah, it's better now, please. So we missed the last, I would say, 5 to 6 seconds of your comment, please.
Okay, sorry. So I've just switched off my camera just to preserve some bandwidth here. There's some issues. So, so I was saying that we've all seen examples of throwing incentives in order to get the customers onto our accounts, and then throwing even more incentives to keep them active when it was not really solving the problem. And I think that strategy didn't last very long. And then I think very soon the players realized that that we've got to be able to attend all of the above that I said earlier. So what we have seen in our experience, and I think the rest of the commercial banks might be similar, answer to your last question is, last part of your question is, that we started to see a significant momentum. We never thought that people who were used to opening an account by walking into a bank branch over the last 70 plus years would actually take on opening an account just sitting on the internet in their living room. And better still, would be able to deposit monies in those accounts. And we were surprised with first the success that we saw in Roshan Digital Account, and that surprise element continued when we started to see the trend of these accounts being open and the deposits being generated through the normal digital account or the Asan account for that matter. So yeah, and then I think the bigger your bigger question was the problem of addressing the cash to digital conversion. And look, there are multiple use cases that would have to be addressed. We all know the use case of internet shopping, and we know the use case of proximity shopping, and we know the use case of giving people the ability to save money, and then the ability to be able to borrow and all of those interventions have been taking place, but we just need to be able to scale up. I mean, for example, one intervention, because you asked in particular about my bank, one intervention we did about 3 years ago, we started putting up cash deposit machines in the country, which were interoperable also, because the topic is interoperability. And we said that, look, those machines should be able to accept deposits into any bank account in the country. And again, because luckily we managed to perhaps address some part of the real issue of the customers, and last year we collected about 350 billion rupees from those 400 cash deposit machines, and a significant majority of that cash, or a significant element, I must say, of that cash is actually on other bank accounts and not in Bank Alfala's own accounts. And what we as a commercial bank were good at was to manage that cash and redeploy that cash. And we just set up an acquiring network, which was actually interoperable and being used by the customers. And even more so, we were surprised not surprised, we expected, but we were surprised to see the element of that, a significant element of that cash was being collected after 5 o'clock, when most of the bank branches get shut also. So it was addressing a very particular need of our economy, where our trading and our markets are open until 10, 11 o'clock at night, and bank branches shut down at 5:30. People still have the need to be able to keep that cash and redeploy that cash back into the banking system. And then, having made those machines interoperable, we managed to somehow address that. So I think in nutshell, in summary, I summarized that the product should be able to solve a real problem. The context of that and the customer segment should be correct, and then the usability and the user interface and user design should be correct, should be okay. Then and then obviously the onboarding experience of that. Then we don't need to throw a lot of money in keeping those customers active with us.
Excellent. Thank you very much for some great insights. Just one more thing that I would like you to address or comment upon, Yaya, which was the last part of the question. So with all these developments and focus areas, I'm sure if Bank Alfala is looking at them similarly, all the other banks would be looking at it as well. What is going on, or what do we have to do? What's the extra mile that we have to travel to ensure that the people who are unbanked and who are in far-fetched areas, or let's say in rural areas, how can we bring them into the bank network? I mean, is there anything that we need to do further on this? If you can briefly shed some insights on that.
Yeah, I think so. Fair enough. So look, you'll be surprised that the majority of internet shopping, actually, or the e-commerce shopping, takes place from outside Tier 1 cities. So it's not actually from the KLI, because the KLI people are blessed enough to have access to the big shopping malls, and they go there, where the rest of the country doesn't. So, and telcos have done a good job in providing the infrastructure, which, using the devices as well as the internet connections, people are able to connect. I think now the responsibility rests with the financial services providers to, once again, to solve a real problem for the customer. If the real problem for the customer right now is in a high inflationary environment, to give them an opportunity to be able to save money, invest money somewhere, so that they're not poorer at the end of the year than they were at the start of the year. So I think so be it. And if we have the affinity towards a faith-based savings and non-interest-based savings, we must recognize that. I mean, I'll encourage the audiences to read this. I think it is on the internet. It's called CAP, Knowledge, Attitude, and Practices. One of the study that actually was co-sponsored between State Bank and DFID. And it says that an overwhelming, I think it's 92% of the customer segment prefer faith-based banking services. So to provide that, and we've all seen that. I mean, that product is being represented on your panel, and Mudassir, I'm sure, will be able to talk a lot more about it. Easy Pesa. When you solve the real problem of the customer, then I think the divide between rural and urban and these conceptions about or financial literacy only ever comes in if you have the normal literacy actually start to break down. I mean, we have witnessed when a real problem is being solved, people remember long strings. You would all know in Pakistan, if you talk to that segment, they'll remember an 18, 20, 24 alphanumeric based string to be able to subscribe to a package plan of the telcos. And the same we witnessed when it comes to conducting a financial transaction. They remember, they don't even have to navigate through the app options. Okay, the user interface now is more picture friendly, but they remember those long strings. So yeah, solve the real problem and this may not become a problem.
Thank you very much for that. Yeah, very well comprehended. I think the message is clear. Product offerings have to be stronger and wider for the potential users out there. With that, I will actually move to Mr. Mudassir Aqil. Thank you for joining us today, Mudassir. And I would also like to congratulate you once again. I'm sure you have had a lot of congratulatory notes coming your way in the recent past with the award of the NOC by State Bank of Pakistan to proceed with establishing of digital retail bank. So congratulations on that once again. Mudassir, I think I would just like to get your views on, technology and innovation being in the DNA of the institute that you have been associated with for a while now. Particularly for the low income segments, how will a digital retail bank, take Easypaisa to the next level? We have to obviously take into account the availability of Frost. So that is obviously a huge enabler as well. So how do you see this development, and the subject of interoperability being in the discussion, how will it impact the overall landscape?
Thank you, Sharjeel, and it's a pleasure to be joining this very prestigious panel. And I'd like to, first of all, congratulate Karandaaz on releasing this new research. I went through some of the highlights and I found it to be very actually useful, more useful than the Findex, in my opinion, considering that it's more in depth, bigger sample size, etc. And very pleased to see that the financial inclusion numbers are trending in the right direction. 10% increase, and also led by digital. So lots of good things to note here. In terms of the potential of digital retail banking license, look, so for players like us who are already essentially a digital first operation and also a mobile first company, this actually presents a massive opportunity for us to build on the foundation that we already have. So, since inception, Easypaisa has opened roughly 33 million accounts, which is about 1 in 4 adults in the country, and almost more than 1/3 of them are monthly active, doing on average 10 transactions. So the playbook has been fairly simple. We follow 3 principles, which is frictionless onboarding, a customer-centric UX, and then real-time fulfillment, and we apply it to every single use case. What this license allows us to actually now complete the product menu. There are sometimes gaps in it because of regulatory restrictions, etc., and really focus on the long tail of Pakistan, the common Pakistanis, those 70%, as you have noted in your research also, was still unbanked. So there is tremendous amount of headroom still there. And this has been essentially our bread and butter. We've been a very narrowly focused company serving these people since the very inception, when we started back in 2008. So what we plan to do is to now start applying some of the new digital principles and technological enhancement with the obviously support of this new stronger license. So an important thing that I want to note is embedded finance. So the next phase of natural progression is that now we need to embed financial services into value chains. So that will be a key area of focus for us. We need to also focus on priority segments like women, and then also international remittance, considering the Pakistan's economic situation will be more important than ever. So this license will come in really handy because we were not allowed to deal in FX under our existing microfinance banking license. So, and then obviously MSMEs have been very much, as a microfinance bank we have tremendous amount of experience in that. So we'll continue to focus on that, enhance our offering, product suite in that space also. So, it really complements what we are doing today, and then allows us to take our operation to the next level. And in terms of interoperability, I think I must commend the great work that has been done by the central bank. I think Pakistan is now in a very, and obviously with the support of Karandaaz, I must acknowledge that Pakistan is in a very elite group of countries. I believe there are only 40 countries, if I'm not mistaken, who have a fast payment system. So Pakistan is one of them. And I think this really, between biometrically verifiable ID for the majority of the adult population, a fast payment system, a digital onboarding process, we have all of now the building blocks in place to actually really make an impact. What I think is missing, and this is part of the point that Yahya was also commenting on, and you had asked about what needs to be done more. I think we really need to put together now some effective incentives to discourage cash and adopt digital payments. The other thing which I think is going to be a game changer, that we've been very eagerly waiting for, is the interoperable QR, the RAST QR, which we are very eagerly awaiting, which will be released soon. And I think the RAST QR should be mandated to be accepted at all retail outlets in Pakistan. So the offline payments should be mandated, that at least RAST, and if not more, other digital modes of payment should be by law mandated for all the retailers to accept it. I think if we could do these two things, and then the third one that Yahya also touched upon is how do we, so we have now ways to open very conveniently a digital bank account for majority of the Pakistanis. The regulatory space is available, then RAST rails are available to move that money for free. So all of these good things are in place now. What we need to do on top of it is to also make it convenient for people to convert their physical cash into digital credit in their wallets. And that's been actually quite a bit of a problem over the last few years, because since COVID, these transactions have really skyrocketed, but the physical agents available who can facilitate these cash deposits or CDMs, which are obviously capital intensive, are still fairly small. I mean, that number is not really growing. Just to give you some perspective, that we are now converting 100 billion rupees a month, so over ₹1 trillion a year of through our agent locations, this cash into digital credit into the wallets, which then flows free of cost on RAST rails and IBFT rails across the country. And we are already accounting for well over 10% of the volume of RAST money, which is since inception that has been moving on these rails, 4.5 million users. And then on Asan Digital Account also, we are the leading contributor with over 500,000 people who have already opened an Asan Digital Account with us. So I see a tremendous amount of headroom, exciting opportunities. But I really think I would conclude by saying that it's critical now that all of this good infrastructure should be supported with some good incentives, and some offline payments should be that part of the problem needs to be solved as well. Thank you.
Thank you for that, Mudassir. Thank you very much for sharing those valuable insights. With that, I will actually move to Noreen. So welcome to the webinar, Noreen. I mean, being a serial entrepreneur, who has been there at the very beginning of the NBFC journey as the first NBFC licensee in terms of the Taste Financials venture, which was a huge success, and still being right in the middle of payments landscape. I would like to take your view on the on the interoperability in terms of the merchant use case. So under the current architecture of our payment systems, interoperability has been offered through POS systems, which all merchants have been benefiting from. And over the past year or so, we have seen some substantial growth in that area as well. I mean, over 50% of growth in volumes and 50% growth in the actual number of transactions. And over the same period, we have seen e-commerce grow by over 100%, and like 70-odd% in value as well. So again, as RAS advances into its merchant phase with the P2M use case, which we will be talking about with Mr. Sohail as well, will we continue to see a positive trend in the e-commerce market as it becomes connected with a central payment gateway like RAS, with potentially no cost environment, or at least we can say low cost environment? And also, do you see any new business models that could emerge as a result, which other players can leverage?
Well, thank you so much, Sajil, for that. First of all, I'd like to congratulate Karandaaz for putting up such a great survey. It's been a while since we actually got tangible numbers on the industry. Congratulations on that. And it's amazing to be among such an elite panel here today. Well, interestingly, I think, Sajil, there are multiple aspects of the questions that you've actually asked. There's an aspect of interoperability. There's an aspect of, merchant challenges, and there's this aspect of how e-commerce, can propel. And I think primarily the three core challenges that probably are shared when you talk about this particular area of interoperability. And I think the first one for both merchants and e-commerce practitioners would be that of high costs, primarily on the MDR side. And I'd like to take an example of ourselves where, we are engaged both on the issuing and acquiring side, of course. So there's a double jeopardy or double-edged sword that we as practitioners in the e-commerce space have to bear on the payment side. The second challenge is that of collection of funds, for these merchants from customers. In the e-commerce space, that takes shape in various forms, not only online on the platforms of e-commerce, but also offline, since majority of e-commerce transactions are actually COD. So logistics players get involved here. And, there's an entire infrastructure to that. And, last but not the least is that of access to funding, which is where, I'll actually touch upon how new business models can come into play. So talking about each one of them, when I talk about, high costs, and, both Mudassir and Yaya have spoken about, their experience and the challenges very eloquently. And we've seen, the adoption of contactless payments has been generally slow in Pakistan, despite, the amazing range of initiatives that the central bank has taken, including, unified standard, which is the QR payments, simplifying the onboarding process for merchants. You talk about, merchants themselves, they're not ready at this stage to introduce such type of contactless solutions at the POS terminals. But they themselves are looking for workable alternatives for low-cost payment acceptance. Now, RAS is expected to have API-based connectivity to enable banks, e-commerce platforms, fintech players to leverage this payment trail. And e-commerce platforms in particular offer, significant scope for growth in digital payments. You talked about, numbers in terms of both e-commerce transactions in volume and value. I'd like to see the numbers, the actual source, but, when I was looking at the payment system review, it actually said that digitally, the number of e-commerce transactions in the last quarter of 22, which is March ending, it was 27 billion rupees that were conducted during the quarter. And, this actually, there was a 1.3% growth in value, but the volumes actually declined. Now, we've seen already in COVID, we've seen a trajectory happening there, but the question mark here is, will that trajectory and the momentum continue? Yes, so I feel RAST has, that advantage to help that momentum continue. With cash and delivery being a major obstacle, how do we solve for, the conundrum of cash versus digital? A great example we've seen actually, UPI, which is not only now in India, but in various countries, is how they're actually accepting payments through their current accounts or any UPI app, which uses the VPA for actual, acceptance of payments for merchants. And now we see, with the next phase of RAS coming in for merchants, this definitely would help, merchant acceptance, both, online on the RAS platforms and actual use cases happening on within physical stores as well. Now, if we talk about collection consumers, we know that there's one very strong option that RAS can actually build upon, which is the request to collect, which is the pull option. And merchants actually can then have the ability to request customers for their goods and services. And these payment requests can also be configured via the apps to expire within a set number of minutes, for example. So, and the best part about this is that this can actually happen at low transaction fees or almost nil transaction fees, which again actually addresses the challenge of, high MDR that, one of the major concerns with e-commerce transactions. Now, on the large e-commerce operation side, we've actually seen banks already working, with the payment gateway side to support e-commerce platforms. But then again, we've actually seen that smaller merchants, or majority of the merchants actually do not accept, IPG payments or even credit card payments within their platform. So RAS again, has this ability. You guys actually mentioned in your survey that 32% of the actual P2P transactions that are happening to merchants. So it'll be interesting to see, how that transition happens when RAS for merchants becomes live. And, I think that actually takes me to the third point, which is actually that of access to funding. And this is actually the closest to my heart because, this is something that we're working very closely towards. And, we feel RAS in itself has the power to actually transform the landscape here, both from the interoperability perspective, but also to add on additional use cases. Now, why I keep on alluding to UPI is because, we've actually seen the success of UPI, and RAS in itself, can offer that and much more in itself. So the UPI credit, for example, is something that's now being used where customers can borrow instantly by just using a QR code. Now you have players like, WeCard in India that are actually using this. Of course, at the back, you need licensed entities, which could be banks or could be fintechs, but particularly on the BNPL side, this is something that is actually very powerful. With us, for example, we've recently partnered with MasterCard to launch an installment card, which is actually, it's actually a debit card that works like a credit card. And what one can do is, with these payment rails, you can actually build upon the merchant data or even the consumer data that can be built upon the RAS platform to lend to customers. Right now, I'm aware that the State Bank is working on the open banking platform, for example. And, where that open banking platform is actually going to reside, I think RAS is going to be one of the most promising, or even, I'd say the most, valid points of data sources that the open banking platform can be based upon. Once you see more and more transactions happening, both on the P2P and the P2M side, on RAS, this data is actually going to be very useful for lenders to build upon and to build, RAS credit on, for example. Now, this can not only be for online merchants, but also offline. By offline, I mean those that are on physical stores, because once you have data on consumers and merchants, you can literally provide them the ability to transact at point of sale terminals using simply, their bank accounts or their RAS accounts to bridge that, that financing gap. And in this case, merchants don't even have to take on the credit risk. So I think this is actually on both on e-commerce in particular, there's huge momentum that can be played upon here. And I think RAS on the interoperability side, brings in that huge edge that we can, capitalize upon. But then again, I think to both Yahya and Mudassir's point, the major areas to convert customers from non-digital or cash to digital. And the question again is, how do you actually bridge that gap? Is it through incentives, which, in my view, are not sustainable? And, many times there's a missing link between loyalty and incentives as well, in my view. But again, I think by mandating this, in many ways, we can actually propel that. Taxation, for me, I think is a major cause of concern that many times, we speak about, but it gets overlooked. We've actually seen, in certain provinces where, online transactions are being encouraged by, reducing sales tax rates. Maybe RAS can actually follow something like that to get more and more customers to come and transact and, get more of these use cases on RAS.
Thank you very much for that, Noreen. A lot of ground reality-based insights there, and especially for our State Bank participant, Mr. Sohail Jawad. I'm sure he is taking note of what the market is expecting, and obviously the expectations associated to P2M use case are huge, and we will certainly get some review of that from Mr. Sohail. Before that, welcome, Russell. And thank you for joining the discussion today. As the principal investigator on the Interoperable Payment Systems Research Initiative that you are conducting across 5 countries, which include India, Myanmar, Philippines, Tanzania, and of course, Pakistan. We would like to understand from you, which seems to be, if simply put, a chicken and egg situation. We have seen that in some countries, interoperability is actually discussed as the digital financial services ecosystem grows and matures. We have examples of Tanzania to take into account, but there are other examples as well, like Ecuador, Peru, and Egypt, where the interoperability interventions start even before DFS has really taken off. In your experience, based on your vast study of this space, do you think one approach is better than the other, or do we have to strike a balance and go with both in parallel? So if you can share some views on that, please.
Okay, great. Thank you so much, Sharjeel. I'm really honored also to be here on this very distinguished and impressive panel. And I also want to commend Karandaaz and partners for the huge lift that this new FII survey is. And particularly for me as a researcher focusing on interoperability, the module in the FII on interoperability is really exciting. To my knowledge, it's a world first to have such a detailed module on a fast payment switch. So I really want to commend Karandaaz for that. Yeah, in terms of this question about kind of the timing of interoperability, it's one of the emerging research questions in this space. So I would say that, prior to introducing interoperability, there's an incentive for financial institutions to build an incumbency advantage through having a large network of clients. So there's a lot of power on kind of the in-network advantage of having a lot of clients in your network. And so that encourages financial institutions to, build out infrastructure, whether that's, branches, brick and mortar branches, agents, whatever the interface is to consumers. So when there's frictions between financial institutions' user networks, there's an incentive to kind of build up this incumbency advantage. Interoperability can blunt that incumbency advantage. It pulls down the walls and moats between the user bases of different financial institutions, which can create more competition. So the competition becomes less about building up this big client base and more about product. That may or may not advantage larger FSPs. They might have stronger product teams and still do really well. But it could also allow smaller FSPs, fintechs to break into the market. Noreen highlighted a lot of exciting opportunities that we might see in the coming years in Pakistan. Now, the downside of starting too early is that it could blunt investment incentives for financial institutions if done too early. So without interoperability, financial institutions are trying to build out branch networks, build out agent networks. Now, when that becomes shared infrastructure under interoperability, that might blunt those incentives, because I'm thinking, well, should I build another branch? That'll give access points to, to other providers if the money's flowing more easily through the network. So where that trade-off really balances out, I think it's not clear yet. We can look at examples from different markets, but it's probably a bit too early to say on a global scale, but certainly it's something that we're looking at. And I think really the key challenge that we're highlighting today and seeing in the FII results is this challenge of making digital a better competitor for cash. So we're seeing that cash is remaining a dominant payment instrument in Pakistan. Cash is interoperable, it's instant. You give someone the money, the payment clears instantly, but it doesn't travel as well over distance. It doesn't integrate as well with e-commerce. It can be less secure. So how do digital payment options compete with that? We're seeing, I think, promising signs in Pakistan. As Mudassar said, there's some really exciting building blocks. We're seeing ROST coming online. We're seeing from the new FII, we're seeing emerging awareness of ROST and the opportunities there. It's a low fee environment. We're seeing growing trust in financial institutions. And from a research perspective, we really think that merchant payments and point of sale is a really exciting area to look at. And that's just kind of about to emerge in Pakistan. So, even in markets with much higher adoption rates of digital financial services, the point of sale kind of merchant payment is still pretty high friction space without a fast payment switch. If there's not a match between the consumer and the merchant in terms of being with the same FSP, it can be really hard to transact digitally. So I think there's real room to solve a problem for users. As Yahya was saying, it's really about solving frictions for users. And so seeing technologies emerging like QR code based payments at point of sale enabled by ROST, that really makes digital start to feel like cash. And so that angle of kind of point of sale merchant payments is something that we're looking to focus on in our research in Pakistan over the next couple of years. And we hope to continue to partner with Karandaaz and others here on this call and this initiative. So thank you so much.
Thank you very much, Russell. We certainly look forward to the completion of our research work, through which we'll probably get, a better picture of what the hurdles are and how we need to get around them. But thank you for sharing high-level insights on that subject. Just conscious of time, and I think a lot of our participants are waiting to hear from Mr. Sohail Jawad, who is the Executive Director for Digital Financial Services at State Bank of Pakistan. Welcome, Sohail Saab, to the panel. Without further ado, everybody is keen to know what's going on in the P2M use case space. So if you can shed some light on the progress in that space so that the excitement can be, curtailed. And at the same time, I would like you to comment that in addition to ROST being a huge success of State Bank and still work in progress, are there any other possible interventions in terms of interoperability that State Bank is looking at to further strengthen the interoperable landscape of digital financial services in Pakistan?
Thank you. Bismillahirrahmanirrahim. Thank you, Sharjeel. And first of all, I would like to congratulate Karandaaz and the team on the launch of the survey. I think it's a great effort by the team, and also on organizing this event today, online event, and this discussion. I've been listening to much of the discussions that have been going on. And I'm sure that people today who are on this webinar would take back a lot with them to think and ponder upon. I'll just answer the last question first and in the reverse order. I would like to give our feedback and thinking of the regulator around the concept of interoperability. And in addition to what Russell has said, Russell has made some really valid point other than all the participants here. We have been thinking about interoperability since 2002. And we started with ATMs. And you will recall that at that time, there was one ATM switch in Pakistan. And State Bank thought that we should have another ATM switch. And then a couple of years down the road, we mandatorily asked both the switches to become interoperable with each other. Now, I think that's a classic case study. And I would suggest Russell also look into this as part of his study. Because what happened after that was there was, of course, for customers, there was a huge convenience. So you can now walk into any ATM and for a very small price fee, you can actually withdraw cash. But what happened to the switches itself? We saw the original switch going out of business and the other smaller one coming in. And the other, I think, impact was that, and this is my own view, and I may be wrong on this, but I think that led us to the decrease in the growth of ATMs. And as a result, by I think 2012, we still had only around 6,000 ATMs. And then State Bank had to come up with a new regulation and say, look, you need to increase the number of ATMs and match it with the number of branches that you have. So what I'm saying here is that interoperability may prove to be a double-edged sword. It may not be a silver bullet for everything. And the regulators have to be very, very cautious when dealing with interoperability. The issue of timing, of course, is of extreme importance. And we have to see when do we go into the interoperability thing. We do it too soon, we may kill innovation. We do it too late, we may have large players and monopolies on our hands, who are not willing to interoperate at a later stage of their lives. The second aspect, which is again very important, is the nature of the interoperability, whether we want to do it, we want to mandatorily impose it or not. So ATM interoperability was mandatory. And I think after that, we have refrained ourselves from mandating the interoperability in other aspects. Then what type of arrangements do you want it to be? Do you want bilateral interoperable arrangements? Do you want multilateral interoperable arrangements? You want switch level interoperability? You want business level interoperability, or you want interoperability in governance levels? These are very important questions. And that was the reason that after 12 years of the ATM thing, I think in 2014, we issued the regulations for PSOs and PSPs, payment system operators and service providers. And that was a significant step towards achieving some sort of interoperability, and that too by the market players themselves. And we were expecting that as a result of those regulations, we'll have new switches, we'll have new PSPs, we'll have new service providers who will bring the interoperability aspect into our payments domain. Unfortunately, it didn't happen for a long time. We only had the check clearing PSO, NIFT, and then the NIFT, and then the one link, the ATM and the IVFT switch. And we had to wait for a long time for the third, switch PSO to emerge. And still, the space is not very encouraging there. So RAST is, I think, the third and the final, what I must say, weapon in the arsenal of the regulator. So if you mandate it, people don't agree. If you issue regulations and encourage participants, people don't agree. Then I think somebody has to come in and put in place the infrastructure themselves. And I think that is what we are trying to do here. So what RAST does is that it provides you an interoperable set of plumbing through which anybody can just log in, connect to, and then conduct their transactions. With interoperability, one more thing for regulators is that the oversight arrangement of regulators need to be very strong. And we need to implement standards and principles that are being implemented in many other countries around the world. So for example, principles for financial markets infrastructure, some of those principles provide guidance for the oversight of interoperability arrangements between some of the participants. Now coming to RAST, and I know a lot of things have been said, good things have been said about RAST, but RAST is of course, like I said, interoperable arrangement. RAST is based on international ISO 20022 standard, which not only just gives you access to payment systems, but to some of the other API-based services as well. And we have had, I think we have some good success with RAST. I must say that because we started the P2P RAST module in February last year, and up till now, RAST system has processed over 1.1 trillion rupees and about 60 million transactions as well. Just in the month of January, RAST processed about 9 million transactions and almost I think 250 or 260 billion rupees. So the response is really good, and in fact, it's more than what we actually planned for. But having said that, I think we need to understand RAST is not the silver bullet. It's not the panacea. It's not the solution for all the problems that we have. So I'll be very careful when I pin my hopes on RAST. Yes, RAST is there. It's there to facilitate customers. It's there to facilitate businesses. It's there to facilitate the emergence of new players like aggregators. And of course, with RAST, the regulator, our teams are changing our thinking. We need to think differently about the overall interoperability concept. But I think what needs to be done is that the market players, especially the service providers, need to work on product development. They need to think about how they can innovatively use RAST to offer new services to the industry. If we just hope that RAST will do everything for us, I don't think that's going to be the right step. Thank you.
Absolutely, Suhail Saab. Thank you very much. 45 minutes for this session could have never been enough. And we have a list of questions, which unfortunately I would not be able to take at this stage because we have run out of time. However, some generic questions that I can personally comment on. So there is a big query going on around setting up of guardrails as well, just because to build that confidence in the digital ecosystem. So yes, there are some initiatives on the horizons. There are some discussions on the horizon around fraud detection and how to avoid it. And hopefully we will see some developments in the near future on that. Thank you very much to all the panelists, Noreen, Russell, Suhail Saab, Yaya, and Mudassir. It was fantastic to have you all and to get insights from you in your respective domains. Thank you very much, and over to Hassan.
Thank you so much, Shajil and the rest of the panelists. This was a very enlightened discussion. And thank you so much, everybody, for coming and joining us. And now I would like to welcome Dr. Nafisa Shah for the closing remarks. Dr. Nafisa is a member of the National Assembly of Pakistan. She is former vice chairperson of the Commonwealth Parliamentary Association. During 2008 to 2013, Dr. Shah served as chair of the National Commission for Human Development, and she was General Secretary of the Women's Parliamentary Caucus and is presently a member of the Parliamentary Standing Committee on Finance, Law, and Justice and Information. She also served as Nazim of District Khairpur from 2001 to 2007. She also authored a book titled Honor Unmasked, published by Oxford University Press on honor killings in Pakistan. Dr. Shah has completed her master's in social and cultural anthropology from Oxford University, and she also holds a doctorate in anthropology from the same university. And with this, I would like to ask Dr. Nafisa to give us some remarks.
First of all, I want to thank Karandaaz. Good evening to all the panelists, participants, listeners to this very important online event on the launch of the Karandaaz Financial Inclusion Survey. It's K-FIS, I think the acronym. And I want to thank the Karandaaz team for inviting me
to give my closing remarks on what has been for me learning experience, the multi-dimensional, the presentations were informative and had so many different aspects. So it was for me really a very enlightening webinar today. I want to, and I'm aware that all of you must be tired, and there must be a listening fatigue also to this this important event. But I want to talk about 3 or 4 different big items today. I just want to give a structure to what I'm going to say so that we can keep it focused. First of all, I want to talk about the survey itself and what I understood or what my take-home message was, what I learned, what I really want to take forward from this survey. Second, I want to just give a broader context, a political, social, economic context. And I want to talk a little bit about, of course, the macro picture in Pakistan today vis-a-vis the economy and the financial sector. And then, of course, the micro picture. I live and work in, and my constituency is Khairpur, and I represent Khairpur when I stand in the assembly. Of course, I represent all of Pakistan and all of the sectors, but particularly my voters. And I want to talk about the state of financial services there, if you like, what I see in my area, and sort of the differences of the worlds between what we are talking about today, which is a very sophisticated a conversation, and what is really happening on the ground. So the situation at the macro and micro. And then I want to talk about some policy issues and then some recommendations on way forward, which I want to suggest to this forum, particularly to Karandaaz, as like what my questions are on what should be the next level of, the survey or the numbers. So, of course, we all know that numbers speak. And in this survey, from a lot of the slides for me were also opaque because my own financial and digital literacy is limited, I would say. I looked at some slides very carefully. So the financial awareness side, some things that I would take home as a politician, or some were very striking in terms of the information they shared and the stories they told. So the financial awareness, the financial literacy, digital literacy, the use of phones, of course, the bank accounts and access to overall financial services. And then what I learned is, this is a 7th survey, and in some ways, thanks to the great equalizer, the digital and the tech side of it, there have been leaps in terms of achievements and the financial integration and the access to financial services. But in other cases, we are stagnant. And what I want to talk about today is that this debate or discussion is on financial inclusion. But what was striking was, and what I learned from your numbers, is the story of social exclusion and financial exclusion in Pakistan. And some of these themes recurred slide after slide after slide after slide. One thing that is very concerning, what is a really stagnant figure, and I, as a woman who works with women very closely in my area and generally, in the parliament and so on, and I've been a secretary of the Women Parliamentary Caucus. And so this is of really intimate concern to me, is that really women are totally excluded from the financial services or financial sector in Pakistan. And this is a story that repeats itself in your slides. The other thing that is a story of social exclusion in Pakistan, and of course of, again, I would also talk about inequalities, is the rural economy. I think it's quite striking that the rural economy is always lagging behind, even with respect to financial services. The other thing is, again, very striking, is a north-south divide in Pakistan. And this is something that I've noticed in every aspect, in terms of wealth, in terms of, apart from, of course, Karachi, But even within Karachi, there is a huge, divisions in Karachi. But apart from that, there is a north-south divide, and that is there even in terms of financial services or financial inclusion. So women, rural economy, north-south divide, the poor people are obviously financially excluded. Then inequalities. What is striking also from your presentations are the inequalities in our structure and our system, in our society. And that is the male-female, the gender divide is always there, always present. And the literacy divide, it's quite clear. I heard in one of the slides that the access to tech has perforated that divide, but it's still there. The divide between the literate and the non-literate, the higher educated you are, the more access you have to the financial services. So these were some of the things. Some of them were obvious, some of them were not obvious. And I really want to commend this survey because I think that financial inclusion is a key, or an access to an equitable distribution of wealth, an equitable economy, an economy that is for everyone, financial services that is for everyone, and it is actually about fundamental rights. So I want that, I promised to take this presentation to the National Assembly's Finance Committee. If Karandaaz allows me, I think that this should be widely disseminated. You'll find some of the most illiterate people in terms of our financial literacy and whatever we discussed today in the assembly. And I think we are the ones who need to be informed, really. And I could post it into our group on the Standing Committee on Finance. If you allow me to share this, I would like to share it because it would be, this information would help us perhaps, encourage better policy and, take it forward from there. Now, I want to talk about the two pictures of Pakistan, the context of the economy. And I don't want to talk about the D word today. Nobody talked about it. So let's not talk about the D word and where we are at, but just generally from the banking perspective, the big picture, and then the little small picture from my story of the floods and where we are at in my district. In terms of capital, in terms of money, in terms of access to credit. I don't have data, but I'm just going to give you some qualitative points to take home, which can lead to maybe some more surveys. So the big picture of obviously something that we know, I've served on the finance committee for nearly 15 years, and something that we know, we talk to the banks all the time. We talk to National Bank, we talk to the State Bank. We've had conversations with the microfinance sector. And one thing that we all know is that the big banks are really not accessible to the people of Pakistan, because the capital or money or liquidity that is available either goes to the government itself, which is the biggest borrower, and at the other level, it goes to the corporate sector. And then the little things that are left behind is something that maybe people access. So the banking sector is not available to the economy of the country generally as it stands today. And part of it, of course, is something that is not the fault of the banking sector, but it is the way we have as a country that goes regularly to IMF, as a country that has huge, tax to GDP issue problems, and generally our lopsided fundamentals is there's no money available. So what happens to people like, in my constituency, the rural poor, the women, where do they get the capital? And that is where I come to the small picture. So let's go to Khairpur, in my area, the floods. So there are 4 types of assets that people of a rural area would have. So the most precious asset, they would have land, they would have their animals, they would have their standing crop, and they would have their houses. These are the 4 assets. I can't think of, yes, a little bit of jewelry and so on, but these are their main 4 assets. The floods in Pakistan, and the floods came to my district, it came through the rains, through the runoffs, through the flash floods. It wiped out all these assets. So even the land in a way was inaccessible because it was standing underwater. And even today, thousands of acres of land are still underwater. It's the 6th month. So what do you do in an area? It's a huge district, 16,000 square kilometers. 2.4 million people, and that the entire capital is wiped out. Well, entire would be a big exaggeration, but a huge amount of capital is wiped out. And this is a district that has a huge wealth of crops. Horticulture, we have an amazing amount of fruits. We have the dates. It's the largest date plantation district. It was till lately, it was contributing to Pakistan's exports by sending all these dates to, not very value added, but it was sending them to India and to other countries. Then we have other fruits. We have cash crops, we have wheat, we have cotton, we have flour, we have everything. It's a very wealthy district in terms of agricultural resources. But what happens with the capital? So the district, I can safely say, before floods, yes, it was a loan shark economy. And today it's even more so a loan shark economy. Apart from the very small percentage, and that is again a question for Karandaaz to take forward, is what is the microfinance sector doing in terms of rural economy? Because as I said, the big banks don't serve anyone, or a limited level of, the financially included privileged. The microfinance banks serve the poorest of the poor, but how effective are they in really giving credit or financial service to the people? So the microfinance banks, so in Khairpur and in many other districts like my district, it's a loan shark economy. And people are going to the loan sharks, who could be any money lender with a little bit of capital. They'll take huge interest. And we have people, even in those who are in the service of the state, primary teachers, their service books are pledged, passbooks are pledged, whatever little asset they have is pledged. So they are indebted hugely. A rich district like Khairpur in huge debt, and post floods it's even more so. So this is really the picture on the ground, that we have even for the dates crop, which really is something that can help this country, get a lot of dollars. Today we are short of dollars in this country, and the date crop can help. We're the 4th largest date producing country, but what do the date farmers do? They get to take money from the middleman, and the prices are set, so they get nothing except perhaps their bare necessities. They're not able to value add, they're not able to grow. So, this is the state of agriculture in Pakistan today, and some things for you to talk about. And finally, my last 2 slides, one is about the policy. Now, when it helped me, I wanted to do my little research, and when I looked at what policy the last 15 years in the parliament, I really haven't seen any debate. I mean, yes, every budget debate is actually a debate on the financial wellness of this country or where we are at. But in terms of jargon, the word financial inclusion, you would not see it in the parliamentary debate. Maybe in the committee, but not very often. So in terms of policy, the only slide or the only little picture I saw in terms of policy is a state bank national financial inclusion strategy. I think it was 2015. They had some targets. I don't know if that is achieved or not. I'm hearing good things from all of you about the state bank and their contribution to all the various aspects of financial inclusion. So I want to join in commending them. But apart from this, there is no policy focus that I feel. From the importance of this issue, I think as a parliamentarian, I would say that this is something too important to be left to the financial sector, too important to be left just to the state bank. Politicians, those who speak to the public, those who gather crowds, those who are public representatives must own it and must talk about it. And something that it was not even in my radar. So this is something that needs political ownership to really take it to scale. You talked about interoperability. So this is something that should go to the cabinet, not just to the finance ministry. It should go across ministries, it should go across sectors, it should grow across businesses. And this is something that needs a national focus. And it's something that I can, as I said, my contribution to this would be to take this debate back to the National Assembly, and particularly to the Finance Committee, so that this survey gets the kind of importance and the outreach that it deserves. And so I think from the policy perspective, it needs really more political ownership. I think the legal frameworks are very important. There are so many different aspects of the financial inclusion that I learned today, but and so we need that many legal frameworks, and that is again where Parliament could play its role. And I can go on and on about the policy, but I don't want to take your time. And finally, some little suggestions on this survey. It's a very rich survey. It's important, but I am an anthropologist, and anthropologists like numbers, but we like quality more. We like voices more. We like people's situations more. And I think that perhaps a qualitative survey, would also give another dimension to this, and particularly for women, particularly for the poor, for the unemployed, for the youth. Maybe we need more voices on what is stopping them from accessing, the financial services that are available in this country. Also areas, I talked about the North-South divide. How are border economies in Pakistan? We have huge border, we have a huge informal economy. How are the border economies, in this country managing with respect to what you are offering, or how we can include those areas more with this? Agriculture, of course, I think we may need a specific, very specific survey, or perhaps micro surveys on, the agriculture, how the financial needs of agriculture. And so in my finance committee, we get this, right, the ZTBL, week after week, we get them, presenting to us, but we find that really there's nothing on offer for the agricultural sector in terms of credit. There's nothing available to the date sector. There's nothing available if you want to grow, horticulture, want to expand it, take it in another direction. You don't get the money, you don't get the capital. So agriculture is something that you could take, take forward. And also, how do the different sectors compare with access to financial services or financial inclusion? How does agriculture compare with industry? What incentives, disincentives? How does industry compare with services? How does corporate sector compare with each of these? I mean, I would expect that corporate sector would be luckier off in terms of access to the big banks, but agriculture, industry. And then finally, I think also I think a lot of the answers to the financial needs or the financial services for the excluded in Pakistan will be in two sectors, the SMEs and the microfinance. And I think that's where, my final comment would be, maybe the State Bank needs to, do something to allow the microfinance to prosper, the rural banking to prosper, and the SME sector to bank, so that we are able to include the larger population. Thank you very much.
Thank you for your comments. I'd like to invite Mr. Karandaaz to give us his thoughts.
Hassan, did you invite me? I could not hear you properly.
Yes, sir. Aapki bari hai.
Okay. Thank you very much, Dr. Sabha. I think it was fascinating to hear you. You spoke both with passion and talked about areas which really need to be looked into. I think it was fascinating for me to how you have linked the financial inclusion deficit with the wider deficits in the country. And the North-South divide and the divide, across many of the divisions and segments, be it rural, urban, male, female, youth, and other segments of the society. I have noted your suggestions, on informal economy and anthropological view of what is hindering basically financial inclusion, and the segments which are lagging behind, the focus on the agriculture sector and the SME reforms. I must make a comment here that the fact that we are localizing this survey would allow it to be properly institutionalized. One of the limitations of the international surveys is that their questions and their frames, tend to be catering to, wider set of countries. So it does not allow them to go too deep into one geography or one set of population. So when we hope to do that, at least we are committing to it. I hope we will have the resources, and the commitment would obviously remain there. We would be able to focus in depth and note these suggestions which you have made. You also asked whether this document can be taken to National Assembly. By all means. Why? Because it's a public document anyways. The objective of this is to create debate and awareness, and I would call it a success for Karandaaz and the financial inclusion agenda. And as you rightly noted, that if it is on the map of the parliamentarians, this is, financial inclusion, or the financial sector provides the rails through which many services can reach. I mean, you passionately talked about the effects that flood has caused in your constituency, and in many other constituencies in many other parts of Pakistan. And if all of them were financially included, integrated with the wider financial system in the country, the state's ability, even philanthropists' ability to serve them and reach them through different instruments would have been higher, and the relief effort would be, more meaningful, more effective. So we have, I think, I enjoyed a lot, more than what we normally expect from, such closing or concluding remarks. Many thanks. Thank you very much for finding time to be here. We may bug you in our future discussions too. And thank you very much, everybody, and the team, for organizing the launch. The report is now publicly available on the site. We will share it through WhatsApp with many people. I would request Meher to share the copy with Dr. Nafisa Shah as well, and wherever then it goes. Thank you very much.
Thank you everybody for joining. And as Mr. Waqas mentioned, the report is available on our website under the publications format, and hopefully it will be updated and other indicators on our website, on our data portal, hopefully in this month. And once again, thank you everybody for joining, and have a wonderful day.
Thank you. Good office.